Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell it, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Hey guys, good morning. Welcome to the live session of Stocks Never Trading. My name is Dave, guys. My partner is Ron. Let's get down to business here, guys.
In on US30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.
Hey, welcome everyone. Good morning. Thank you everyone for joining. It is 6 a.m. Eastern. It is Tuesday, September 16. Thanks everyone for joining. We got a busy day today. We have US retail sales at 8:30 a.m. Eastern. And tomorrow, as you guys know, you should be aware that tomorrow is FOMC at 2 p.m. tomorrow. So if we get enough likes on today's channel and we get enough subs, tomorrow we'll do a bonus session with you guys on YouTube as well, and we'll invite you guys to our live FOMC. So we're going to need you guys to help step up. We have 100 viewers already on our call, and if we can hit the like button right now, that would really help us out. So thank you guys. We appreciate that. Gold looks like it's going to drive to 3,700 up here, this psychological level. Again, it's just had small pullbacks and continuing to drive, small pullbacks continuing to drive. So it is clearly in an uptrend. Just be careful if you're counter trading this. We might start to get more movement once it hits maybe like 3,700, that psychological area. And more importantly, with the news today, okay, because it does impact the US dollar. So it will impact gold as well. So before we get to the charts, we have a lot of just some things we got to get out of the way. We got to go over today's news, today's earnings. There's not too much going on in the pre-market and after hours. And we'll do a little blog on what is US retail sales. We like to educate as well and do live trading and analysis. But you got to make sure you're learning as well, right? So you know exactly what these folders are and what we're getting into so that it can help you, because you're going to see these folders every single month. They keep releasing the same folders. It's just different data every month. And so we'll talk all about that, okay? I hope everyone's doing good. I hope everyone has rested up. We're going to have a 4-hour session from 6 to 10, and then Dave will be taking over post New York. Okay, guys? So let's get started. First things first, we're going to go through the news right now. You can see it's a busy day lined up for today, September 16. It started early in the morning. Just after midnight, we had some Bank of Japan news over here. We had some Australian news. You can see pre-London, there was some British folders over here regarding the British pound. You had your average earnings index, your claimant change count, your unemployment rate. So unemployment rate in the UK month over month looks like it's unchanged from their previous month and their forecast of 4.7%. We had 5 a.m. We had some German news, some Eurozone news. Now we're moving into our North American block soon. So you can see at 8:30 a.m., a reminder, we'll be looking at gold at that time. 8:20 a.m. Eastern is COMEX, Monday to Friday, 8:20 to 1:30. COMEX, we get a million times we get this question. COMEX is a short form for Commodities Exchange. That's an exchange dedicated to metals. And we do trade gold, so we gotta watch and be aware of that time, because that increases volatility and volume at that time, okay? And then 10 minutes later, we'll be walking into multiple red folders. We've got a lot coming out of Canada, including CPI month over month, median CPI, and trim CPI, and common CPI. You guys remember we went through this last week with the US. CPI is Consumer Price Index, okay? So Canada, every nation has their data being released. So this will be high impact, will affect the Canadian dollar, the loonie, if you are trading the Canadian dollar or anything paired against it. There is some volatility at that time. We're more concerned with the US folders at this time, because at this time we're normally trading gold, NASDAQ, Dow Jones, so something directly related to the US dollar. And we have two red folders regarding the US at 8:30. We have our core retail sales month over month. So this is all of the data from the previous month. So we are September 16. So this will be all of the data coming from August 16 till today. So for that month of August, okay? So if you think back in August, and then you start thinking like a retailer, do you think retail is gone up or down? Spending, okay? Core retail sales. So we'll break this down exactly what these are. Core retail, remember with the word core, it's got to involve something. It's got to exclude something when we see the word core. So this is, when we're talking about core retail sales, it's the change in total value of sales at the retail level, excluding automobiles, okay? So when we get this in the release, from the previous month, it was 0.3%. So they're forecasting an increase in core retail sales to 0.4%. That's an increase of 0.1. We'll see the actual number released at 8:30. There is a red folder, so it is high impact against the US dollar. So increased volatility and proper risk management. And then when we see the word core, just know that this one is excluding automobile sales, okay? Notes, automobile sales account for about 20% of retail sales, but they tend to be very volatile and distort the underlying trend. The core data is therefore thought to be a better gauge at spending trends, okay? Why do we care? It's a primary gauge of consumer spending, which accounts for the majority of overall economic activity, okay? And in the next folder that will be coming out, you see is just regular retail sales, does not include the word core. It was 0.5% the previous month. They're forecasting a decrease to 0.2%. So that's a decrease of 0.3% on the retail sales. So remember, this one will include everything, including also automobiles, okay? And then we have our US import prices month over month. You can see that they're forecasting a significant decrease in import prices also. And then we continue after that. Then we're going to start moving our way into Wall Street. This is where we'll start doing a little index review and the charts on NASDAQ and US30. And then at 9:15, so prior to Wall Street opening up at 9:30, we do have some low impact US folders, capacity utilization rate, and the industrial production month over month. Then we get into Wall Street, 9:30. Then at 10 a.m., this is when we wrap up our call, and Dave will be taking over post New York with the snipers in the private Zoom. We have business inventories, housing market index, and then this afternoon, there's some news coming out of Australia, New Zealand. Then we go into the close after our earnings, and then securities close, open up back again for our Tokyo and then futures sessions. Okay, so this is what we got lined up today. Make note of all this high impact news. There is in Canada and US at 8:30 a.m. So we'll navigate slowly into here. Again, I'm just going to remind you guys are all smart traders now. Hopefully you guys are not gamblers. And you guys are starting to use proper risk management with your trading, and hopefully you guys are learning, okay? So that's the news we got tomorrow. And just a reminder, if we get enough support on today's stream, if we get enough likes, enough subs, tomorrow we'll do a bonus session after our New York session. We'll come in around noon, just after noon, and then we'll do our live FOMC with you guys, okay? So we need your support, everyone on YouTube. If you can kindly leave us a like, subscribe to the channel if you haven't already. We'd really appreciate that. We're at almost 85,300. Let's see if we can get this up to 500 is our next goal. So 85,500. You know, like if I was trading and someone asked me, Ron, what's the next psychological number? I would obviously say we're really close to 300. We're only 7 subs away from 300. We could aim for 400. That's the next kind of psychological level, next 100. But the big one, the block in the market would be at 85,500. Okay, so I'm kind of utilizing this to help you guys with understanding psychological numbers and everything like that. Okay. Now, regarding news, so we just went through everything, so hopefully I broke that down. Earnings in the pre-market today, we don't have much. Ferguson and Brand House Collective, again, I wouldn't pay too much particular attention to this. I don't think this is going to have a significant impact on today's markets. In the after hours today, we've got Evolution Petroleum Corp and Flux Power Holdings. So if you are trading anything to do with petroleum, oil and energy over here. Maybe you're eyeballing this security, maybe you're trading it, but if you're not, I wouldn't worry about it. I don't think this is going to have a big impact on the markets, okay? Just some news in general. There is something going on right now. The Senate confirms Trump's pick, Stephen Miran, as the Fed governor. So this was last night. The Monday night confirmation has put Miran in place just in time to cast a crucial vote at the Fed policy meeting this week. So if you want to read up a little bit more about this, Trump is trying to shake it up in there. So we'll see what happens if there's going to be a new Fed governor coming in. And so right over here, here's another related article. U.S. stock futures climb as Senate confirmed Trump's Fed pick Miran. There's some news regarding U.S. and China. U.S. and China have a framework for TikTok deal. So they were going to eliminate TikTok in the United States. I guess they've reached some sort of agreement. That's good for all of you TikTok users over there. And let's see what else we got in the news here. Wall Street raises alarm on Trump ending quarterly earnings. Okay, we talked about that yesterday. You can see corporations report every quarter, every 3 months. Trump kind of wants to change that here. Tesla stock turns positive year to date as Musk buys $1 billion in shares. So Musk bought share buyback. A lot of corporations do that as well. You know, that's a way how they can absorb the outstanding shares on the market and increase the share price of it. Apple does it. Amazon has done it. You can see Tesla and Musk doing it. So it's good. As a shareholder, if I see the CEO buying stock of his own company, then it kind of gives me a little bit of confidence to continue to hold. You don't necessarily want to see the CEO of the company dumping stock. That's not a good sign. I ask questions when they're doing that. Why are they doing that? And it should raise an alarm bell. So those are share company buybacks. Okay. What else we got going on? Let's see here. Trump to sue New York Times for $15 billion. That's in the news if you want to read that. Ford to cut up 1,000 jobs at Germany's Cologne e-car plant. So e-cars, EVs, electric cars, they're not having the big run that everyone expected. I think a lot of people like their gas-powered cars or hybrids. I know where I am. I don't see too many electric vehicles on the road anymore. So, maybe they'll restructure. Maybe they'll do something to spark that side of the automobile sales back up. But let's see what else we got over here. Okay, so gold is trading at record highs. It's only 3,700. We'll continue to watch that, guys. If it's continuing to drive and the pullbacks are trending still up, don't try and counter the trade. Just trade with the trend as much as you can. Okay. Let's just continue moving over here, guys. We got some news over here on our indices, commodities. We'll see if we get anything coming in, and we'll keep an eye on everything over here, okay? On Telegram, guys, there is a free Telegram channel available for everybody on YouTube. It's pinned at the top of the YouTube, so we have 225 viewers. Just a reminder, there is a free Telegram. It's pinned at the top of the channel. This is a funny thumbnail of Powell over here and pushing me away. Do you guys know what movie this is from? This thumbnail. It's a great movie, guys. If you guys on this weekend, if you guys want to sit back, relax, and watch a good movie, it's The Wolf of Wall Street. If you guys haven't watched it yet, it's a pretty good one. This was yesterday's stream. Thank you to everybody. I see that there was some W's. Some of you guys got your pips. Some of you guys manage your risk. That's fantastic. So let's continue to work on that, guys. And there was a little bit of a blog here on why is the cornerstone of consistent profitability So we can read a little bit about that and learn about consistency. We're going to talk about retail sales because these are the folders we have going into 8:30 a.m. And everything that you need is available on this Telegram. It is us. It's not a scam channel. There's giveaways, there's promos, there's everything. All of our live YouTube links are available for you guys as well on there. And guys, if you visit our website, stocksnipertraining.com, you're welcome to join the team at any time. Lots of education with myself and Dave, courses, webinars, long form boot camps. We're starting up Wednesday. Wednesday's a really big day, busy day at SST. So we have our live New York session together, then post New York, then we have our FOMC, and then later that evening at 7 p.m. during the Tokyo session, we're going to get involved in a webinar with the team. And it's in the Zoom, and it will be all over going back to school and learning about TradingView, learning about the indicators, learning about how to utilize your toolbox to get ready for more upcoming webinars, okay? It's kind of like a back to school where you got to get your pencil case and get everything, all of your tools and utensils to continue to learn. So we're going to do the same thing with trading. We're going to get you guys learning all about the parallel channels that I use, how to utilize the Fibonacci tool for points of control, how to utilize all sorts of common indicators and tools that we use in trading, how to use the ruler to measure moves and things like that, okay? And our live sessions, guys, this is our weekly schedule. So we have our trade ideas throughout the week, Monday to Friday, all of our live sessions that we do 6 to 10 currently. These hours do change up, you know, because we change sessions all the time. But right now we're staying steady with this one. There's our post New York sessions, and then our bonus live FOMC on Wednesday, and then our weekly webinar. Okay, and guys, if you want to join SST, you're welcome to. And there's also free blogs available for you guys as well. So you guys remember last week we did PPI news, CPI news, and today we have retail sales news. So let's take a look at what this is. We're obviously going to be trading into these folders. It's good to know, good to learn. For some of you guys already got this stuff down pat, but there's other traders who are looking to learn. So as I was saying on Forex Factory, right over here, we've got our US right over here, our US core retail sales month over month and our retail sales month over month. So then when we're looking at exactly what this is, US retail sales news, breaking it down. US retail sales month over month. So remember, this is month over month. So all of this data that they're releasing is from the previous month of August. So if you look back, think in August, what was the retail sales in the US? Do you think it was high? Do you think it was low? Do you think anything could have contributed to this? So this is where you got to really think back a month ago, and then this is where you can come up with your analysis when they drop the numbers and maybe have a bias on the security that you're trading, okay? So the US retail sales month over month report measures the change in the total, I'll click on it. So the US retail sales month over month report measures the change in the total value of sales at the retail level across the United States from one month to the next. It is a critical indicator of consumer spending. So you and I are consumers. We spend our paychecks, we spend our money in the economy. So this is going to gauge to see consumer spending from the previous month, which accounts for a significant portion of overall economic activity. The data is typically released about 2 weeks after the month ends by the US Census Bureau. An example of this would be if the retail sales month over month report shows a 0.5 increase for July compared to June. This indicates that there was a 0.5% rise in the US dollar value of goods sold at the retail level during July. Okay, and here's the link if you want to go to Forex Factory and see those folders is right here. And then we're going to now learn about the US core retail sales. So there's that word core, okay? So similar to the retail sales month over month, the US core retail sales report also measures changes in retail sales values, but it excludes certain volatile categories such as automobiles, gasoline, building materials, and food services. Okay, so when we see the word core, we have to know that it excludes something. So in this particular example, in this particular situation, the core retail sales, it excludes automobiles, gasoline, building materials, and food services. So you can see this is what we spend majority of our money on: food services, building materials, gasoline to drive every single day, and our automobiles. So this one will exclude all of that, and the other reading will include all of these things. This exclusion provides a clear view of underlying consumer demand trends. For example, if core retail sales indicate a 0.3 increase, while the broader retail sales show a 0.5% increase, the difference may largely be attributed to fluctuations in auto or gasoline sales. Okay, why traders should care? Why do we care about these folders? Well, number one, economic health indicator. Retail sales are a primary indicator of consumer spending health, which drives much of the US GDP. Strong retail sales suggest a healthy economy, while weak sales can indicate economic challenges. It also affects Fed policy influence. So tomorrow we're going to have the FOMC. That's the federal funds rate. The Federal Reserve, with Powell, monitors retail sales closely when considering monetary policy adjustments. So tomorrow they're going to make an adjustment to the interest rates. So significant deviations from expectations can impact interest rate decisions, influencing currency valuations. Number three, market sentiment. Retail sales reports can significantly influence market sentiment. Better than expected results can boost stock markets and strengthen the US dollar as investors anticipate economic growth. Impact on markets, and more specifically the US dollar. Regarding the stock markets, positive retail sales can lead to stock market rallies as companies anticipate increased revenues. Conversely, poor results might result in decline. So we do trade the stock markets through US30, NASDAQ. You're trading basically the stock market index. So it's good to learn all about these. USD exchange rates. A strong retail sales report generally supports the US dollar, as it suggests robust economic activity and the possibility of tighter monetary policy. Weaker numbers could pressure the USD lower. Okay, this is just a little example of like retail sales. So let's just think about this. This is a change in US retail sales of select categories. So these are what's included in the retail sales. And look at the date here, 2022 to 23. I know this was a couple years back, but I want us to just kind of think about, how to go about this. So starting in 2022, did we just come out of something big like in the markets? Do you guys remember March of 2020 when the pandemic started? Around the world there was lockdowns. So that had a big impact on retail sales. Malls closed, movie theaters closed, all of these things. So just think about this now. So 2020 and 22, we were in that COVID, that pandemic era. And then now kind of life got back to normal in 2022 to 23. So look at now what went up and what went down. So restaurants and bars were up 11.3%. Can anyone, just think about why are restaurant and bars up in 2022 to 23? Very simple. It's not rocket science. When all of these restaurants and bars during COVID were closed, right? So they were closed for business. Some of these restaurants and bars closed for good. They had to shut the doors. They couldn't pay the rent anymore. They couldn't keep up. So you probably see in your town, in your city, a lot of bars, restaurants closed. They couldn't keep up. So when everything got back to normal, everything opened up, I'm sure everyone was dying to go to the restaurant, have a meal with the family, maybe go with the friends back to the bar and have a drink. And look at how restaurants and bars went up 11%. So I'm just trying to take this a little further with you guys. So as traders, which we are, if I see restaurant and bars are now increasing in retail sales, I take it a little further. I break it down. There's certain restaurants that are publicly traded companies. For example, Dave & Buster's had earnings this week. So Dave & Buster's is a restaurant that's a publicly traded company. I'm sure that if I'm looking at the option chain of Dave & Buster's or looking to buy some shares of the company, I guarantee you if we look at like kind of these publicly traded restaurant companies, that during this time, I'm sure that they appreciated in price as more volume and more revenue and more retail sales went into these. So this is how you can kind of think as a trader, as an investor. We want to take you a little further than just thinking about Forex and futures. We want to take you guys soon into the stock markets and show you that there's a whole different world over here. Here's another one example, personal health, gym memberships. During COVID, I know that my gym memberships, they kind of shut down, right? You couldn't even go work out. I had to make my home gym at this time during COVID and work out at home. And then look at 2022, when everything went back to normal, what increased? Personal health. Gym memberships. Gyms started to, get increased because people were excited to go back and get physically fit and go back to the gym and go on with everyday life. Gym, personal health went up 8.5%, okay? Auto shops went up. Retail and food, grocery stores started to increase a little bit. Clothing retailers started to increase. Remember, like clothing malls shut down. Everyone was buying everything pretty much from Amazon. So a lot of electronic stores. And then you can see what went down during that time. What decreased? Department stores, coming out of COVID, I don't even go to the malls very much. I don't go to department stores. I order everything online now. Pretty much Amazon brings me everything I need. Next day delivery, it's on my porch. So you can see since then, department stores. So you can, during that time, there was a lot of department stores that went bankrupt and lost money. If you guys remember like Bed Bath & Beyond. All of these companies, movie theaters, remember at that time, movie theaters, AMC and things like that, that's why it caused that big short squeeze on retail traders. They united and got together. They saw what they were doing to AMC and pumped it up where Citadel lost billions of dollars. So there's always opportunities, guys. Home improvement went down, right? Home furnishings and gas stations. So this is just an example. I know we're not in 2022 or 23, we're now in 2025 going to 26, but this is a way how you can think about things, right? I'm just giving you guys some examples of things to think about, okay? So just some general tips for traders during these news releases. Prepare for volatility. It's showing us that they're high impact red folders, today's US retail sales. So there's going to expect a little bit of volatility. Now you should be thinking, how much are you going to risk if you're trading this? Are you going to be in a trade? Will you be trading out of this news? Do you have some sort of plan, or are you just going to wing it and just go with whatever? No, that's not what we do here, okay? When we trade with a plan. Start of the day, you should already know how much you're risking. You should already have a little bit of bias on these retail sales. If you think of the last month to this month. So retail sales reports can cause significant short-term volatility in financial markets. Be prepared for quick price movements by setting appropriate stop loss and take profits. Follow expectations. Pay attention to market expectations and the consensus forecast ahead of the release. Large deviations from expectations often trigger the most substantial market reactions. Look beyond headline numbers. Consider both the headline and core figures. Sometimes the core number provides more insight into the trend of consumer demand. Consider broader context. Analyze the data in conjunction with other economic indicators and events. A single report is rarely indicative of broader trends without context. Stay updated. Use economic calendars to keep track of release times and analyst predictions. Ensure your information sources are timely and reliable to react swiftly. Risk management. Due to potential for rapid market movements, use proper risk management techniques to protect against unexpected outcomes. And finally, by understanding these reports and their implications, traders can make more informed decisions and better navigate the complexities of the financial markets during these news events, okay? And if there's a link there if you want to join SST and take your trading to the next level. The link is right there, okay? So everyone got a little bit better understanding on US retail sales and core, because we will be going through when they release this at 8:30 today, which is 2 hours from now. So we have a lot of time. Now we're going to get started. You know, we're going to get into the charts and everything. Okay, guys. So if you guys can leave us a like, subscribe to the channel. We're going to get started with gold over here. We're going to start off with a top-down analysis. You can see we're just shy of getting up to 3,700, that psychological number. We got as high as 3,698.99. So we're kind of just a dollar short of hitting that 3,700. Will it sell off? Everyone's saying it's got to sell off. It's got to sell off. I'm saying it doesn't need to sell off. It can continue rallying up. It can have pullbacks and continue to rally up. Pullbacks, you can see it was holding strong support here at 36.75, never broke, and continue to make highs, pullback, higher lows, continue to go, pullback, higher low, and it's getting very, very close to that 3,700 up here, okay? So we're going to do a top-down analysis and come bring this down from the daily to the 4-hour to the hourly, finally to the 5 minutes. You know, if you're taking any trades, just be careful. I'm not in a trade right now. I'm going to analyze the markets. But I just want to say good morning to everybody. Welcome everyone on Zoom. Justin, good morning. Thank you for joining. Sang, welcome. Conrad, Bilal, good morning, brother. Mikey, welcome. Thank you. Welcome. DCY, thanks for joining. Reese, welcome. Trevor, good morning. I agree with you, Reese. I agree with you. Trevor, welcome. SSDN, good morning, guys. Okay, and everyone on YouTube, thank you guys for joining as well. We appreciate all of you guys every morning joining us. Good morning. Has Biffinin. I probably butchered that. Justin, welcome. Moonlight, welcome. Good morning, guys. Pablo, good morning. Jay, good morning. Thank you. From all the way from Australia. Thank you. We appreciate you. And everyone else, thank you guys for joining. Good morning to everybody. Let's have a fun, exciting session. And let's see what the markets present us today. Remember, it's the day before FOMC. So the markets could trade a little funny today going into FOMC. So just keep that in the back of your mind. Okay, you don't have to go all out today because we're walking into some high impact news tomorrow. Some very significant news. Okay, so let's start off with gold on the daily. And take a look at what's going on here. So look at the daily chart, okay? It's very, very, very bullish. This is that RSI indicator. You know, I'm telling you guys, you have to be very careful. Look how long it's been overbought. Since the whole month of September, look, it started to get above 70 right there. Monday, September 1st. We are today, September 16. We're halfway through the month, and it's continuing. Look, it's at 81. And you know, it's suggesting, this RSI indicator is telling us it is overbought, we should be selling, but look at the market continuing. If you sell, you're getting squeezed, you're probably getting in drawdown, you're probably getting stopped out, you could get frustrated trying to sell this thing. You know, these are maybe swing sellers that are looking for this and they're continually adding fuel to the fire to the market. By providing liquidity with their stop losses, and buyers just keep buying and buying and buying, and look at it. So we're a few points away from hitting 3,700, and there's been no relief. Like, there's just been small moves and continue to go up. So the overall trend on the daily is bullish, okay? If you think that this is bearish, we got a lot of review to do, okay? So just breaking out, where did it break out? This was the former all-time high right here at 3,500. So I'm just going to highlight it right there. And you can see there was the body of the candle Tuesday, September the 2nd. So remember, September 1st was a US bank holiday, Labor Day. Next day, when everything opened up, markets opened up, you can see we closed above. And since then, it has not even retraced back down to retest this. It was very close on the third day right there on September 4th. but it got that higher low wick and continued to trade up. So this previous all-time high is now a daily point of interest. So I place a yellow line. The zone below is the same zone. So this is that supply zone that we kind of determined back all the way over here in April prior to hitting that all-time high. So we've been using the same red block going in, and then right over there is Friday, August 29 is when we had a body close above and continue to drive. So that's our zone below this point of interest of 3,500. It is now a green zone. It's no longer a red zone. So that is our zone. We also had a bullish flag zone right over here that was holding our support level when we were trading for all of these multiple months. So this was all of April, all of May, all of June, all of July, and most of August. So you can see it was basically all summer month accumulation on gold, and they redistribute it come into September. So this is another block below us, and you can see there was also a trend pushing up. So it is ascending. You can see how it's continuing to push up, and then they broke it out of here, okay? So that's all of our information below us. We're nowhere near this, so we don't really have to pay too much attention right now to what's going on down here. You just got to learn as to what happened and how the volume moved out. So is there any other blocks in the market? I'm looking over here. You can see where there's this bullish flag right here, okay? So you can see now when you start to see price action. I know someone's going to say, Ron, this is easy. I can see it, well, that's perfect. That's what you want. You want it to be easy. Why would you want to complicate this? So you have to look at previous price action in order to figure out where it's presently trading and to predict. That's what traders do. We predict where it could possibly move. So when you know more and you can see more, then you can make your prediction with higher probability. That's what trading is. It's making predictions with high probability. Those are looking for your A plus setups, okay? There's other traders who are predicting the market with no probability and they're gambling. So they're trying to make predictions, but they're making the wrong predictions and they're over leveraging their accounts by not using proper risk management. And you can wonder why they're being unsuccessful as traders and losing all their money, right? But if you know what you're looking for, then it make it easy, okay? So do you guys understand why I placed that block right in there? I trapped the volume. You can clearly see the volume, how it was trading in here. If you can't see this, then we have to really, really educate ourselves. I see that blue candle came in there, closed right there. This was a Tuesday, September 9th. That was a very bullish candle that broke out for a new all-time high. And then look at where it came right back in. Look at where it closed as a shooting star right there. Next day, it opened right there, small pullback, came back up. Look at where the volume closed, right in that zone again. So you can see it's a bull flag consolidating, and finally it broke out Monday of this week, and Tuesday we're continuing to drive. So that is a consolidated block. At one point when it's consolidating, you can either show it as a neutral zone, a consolidation zone, that's a neutral zone, but it's a bull flag, right? It's continuing to build and break out. So when you notice a bull flag, right, you make it green to tell you it's a bull flag and stretch it into the future. Now you found like a block of buyers. So if gold ever does retrace back into this block, it's got a high probability it's going to continue to be buyers in there and maybe move back up. However, if the selling pressure is coming very, very strong and it cuts through that block and closes below, then we'll flip that same block. We're not changing the size of it. We just change the color. When we make it red, then you can see buyers from down here might be buying it back up. And then now they come into a block, a wall of big sellers. And then the sellers are offering in there and then they absorb them. They offer to them. There's more sellers than there is buyers at this time in the market. And then maybe they reject the move and then gold is selling back down to the next point of control, right? Or the next point of interest. Okay, so that's identified now. So that's going to be on my chart, that bull flag. And then I can also now follow what happened below. Like that day when it came down right there, you see that wick? Very easy. Pinpoint where that wick is right there And look at it. It looks like it's exactly 50% of that bullish candle. How can I verify this? Grab your Fibonacci tool. This is what we're going to learn all about on our Wednesday webinar about our tools right there. See how that bullish candle, Monday, September 8th, that's a significant candle. That's the start of the week on Monday. And you see how 50% right there, 0.5, is that exact pullback wick on Thursday, September 11th. If you want to draw your bullish point of control zone of that day right there, you could do that as well and stretch it into the future, okay? I'm just going to keep it with the yellow line to show you that we've already retested 50%. We're still holding it, okay? Again, if I want to continue to dissect down here, there's another point of interest, body to body. There's 50% of that candle. You know, there's a little bit of a fair value gap in between there, and there's more points of interest, okay? I don't really need to start worrying about this because we're all the way up here right now. That's more for you guys if you guys want to do your charts for without, you know, like me, deleting everything and doing new ones, okay? So what about yesterday? Or sorry, Monday, start of the week. We have a very bullish candle that came up, made a high, and closed right there. Can we figure out where 50% of Monday's candle is? Yes, we can. Same way. Opening balance. Bring your Fibonacci tool to the closing balance right there. I can see my point of control of the Monday's bullish volume, and I can determine exactly where 50% is. So let's draw a line at 50% right there, the 0.5. Look at the number. Look at the number, guys. 3,660 on the dot, decimal 00 pennies. Okay? It doesn't get any more psychological than that. I'm sorry. The number is very psychological, 360, okay? 3,660. It's not 3,658. It's 3,660 on the dot, and it's also representing the psychological 50% of that entire volume in that real body of that candle, okay? Are you guys understanding this? Are you guys getting a little bit better now? Understanding trading is a little bit more than just, you know, just looking at trends and things like that. It's also, there's a little bit of psychology that goes behind trading as well. We're trading in an auction, okay? You guys got to understand that. This is a live auction. Just because we're not there, we're not invited to be at the auction, it is a live auction, okay? So very important. Now, don't just stop there. There's also, don't leave the meat of that volume. There's your bullish point of control right there. It's your ratio of your Fibonacci, one above and one below. In this situation, it's the 618382, okay? It could be flipped, it could be reversed, where this is the 382 and the 618, but those are the numbers that you're always looking for. So there's the bullish point of control. I'm going to ask you guys, have we traded back into here? It's not a trick question. The answer is no, we haven't. How can we tell? Because we can tell today's low is right here. So we have not retraced. Gold has not came all the way back into here. If it does, that might be a great opportunity to look for a pullback buy. We're trading at almost 3,700 right now. So if it comes all the way back to 3,660 or at the bottom, 3,655, or maybe at the top, 3,665, we might be looking for a potential buy coming back in there and taking it right back up, right? Again, if that block doesn't hold up, then we're going to trade back down to this block. This is called a depth of market. So when you identify it, stretch it into the future. Stretch it for tomorrow, next week, next month, correct? And if you want, place an alert there. Right-click that yellow line, right at 50% of the zone, add an alert, create it. So I have an alert. If it ever comes back in here, I'll get alerted. And then it's not just get alerted and trade blind. It's get alerted and watch what's happening. Look at the volume in there. Is it on the lower time frames? Is it doing something? You know, is it building? Do you see a double bottom? Do you see a pullback? Do you see, like, what do you see, right? Now let's follow this volume. We came up, we made a high, and we closed. So closing price is a point of interest. There it is. That's where we closed yesterday. Now I look at today's open. Was there a gap down, gap up in the market? No. It looks like a clean transition from where they closed it to where they opened it. I can see today's opening balance is now 3,677.78. When it initially opened up, there's a wick, a tail, a shadow on the body. So it's showing me sellers at opening price were in control basically. They brought it down where it was bearish, but it stopped right there. Okay, this could have been a bearish day that came all the way and transacted in here, but it didn't. It's showing us right now the lowest point of the day currently. There's my purple line. So you can see the purple low is 3,675, I would say, that psychological area. And when it got right there, now I can see it did not come all the way back down in here. The buyers stepped in and they rejected that move. They were asking to trade higher. They were asking to trade at the opening balance. They got filled up there and they were continuing to ask to trade at 3680, 3685 right there. So you see yesterday's high is a point of interest. That's the highest point yesterday and it's still fresh in the market. It's only yesterday. So I place a yellow line to recognize yesterday's high and it could be support going forward. So if this sellers push this blue volume all the way down, it's coming all the way down, we might find support at yesterday's high, which was resistance. It could be support today at 3685, and then the buyers continue to ask and fill up the candle coming back up. However, if we lose this point of interest, then there's a high probability sellers could continue to push it down to the opening balance, to this yellow line. And if the buyers are not there, the sellers could easily flip the candle, turn it into a bearish pin bar or a shooting star, and start attacking the lowest point and then drop it even further down, okay? So sometimes it comes, it's a bullish candle and it comes all the way down back to the opening price or the low, and then the buyers buy it right back up. All those pullback buyers buy it back up, and then you see the candle continue to go right back up. So it's not always a guarantee. If we come down there, it's going to flip and go bearish, but we have to watch down there. We could be buying discounted pullbacks as long as the demand is still there. So let's just continue following our daily volume. We took out yesterday's previous all-time high, and gold is continuing to come up. So we made a high of the day right now. It is a new all-time high as well, right up there. What is it at? It's just shy. Look at it, just below 3,700. It's basically 36.98 and 84 cents. Okay, so it's kind of like when you're shopping at Walmart. You know, Walmart doesn't just show $3,700 price. They'll show $36.99 and like 75 cents or something like that. So it's just like we're shopping, you know. So we just could not hit that psychological 3,700. They just kept it below, and you can see it got rejected, and the sellers are trying to push all of this volume down, right? But this daily candle, we still have 10 hours plus to go. So this is a long time. So this could continue driving bullish. Sellers could absorb all this and flip this candle, you know. So it's still early to determine where this thing could go. But if you ask me, and I'm looking at a trend, I see it rallying bullish. There's the flag. It got rejected multiple times, but didn't really break below here and continued driving out of here, okay? We already looked at RSI on daily. It is showing us it's very, very overbought, but we got to continue just watching the volume. So what if we come back up to 3,700 and we break? Where could we go? It's price discovery. It all depends on what type of trader you are. Okay, so you could go to, if you're a scalper, go to 3705, 3710. Those are 50 pip increment zones for scalping. If you're more of an intraday trader, maybe go 3,700, go to 3710. 3720, then you're giving yourself 100 pip zones. It always, you know, those 2550. So I would go 3725 just as a marker. 3725 right there, yellow line. Okay, the next one would be 3750, right? Those are your bigger daily points of interest, your markers. Next one, 3775. Think of it like an auction. Next one, 3800. Your big block would be 4,000. 4,000. That's your big block. Okay. Are we going to continue to drive? Gold could possibly continue to drive, right? There could be pullbacks as well, but right now let's dissect this daily candle. Let's cut it. Now we're surgeons. Let's bring it down to the 4 hour. Let's figure out where did the majority of this daily volume come from. So I can see how it moved up over here. This was last Tuesday. We retraced back down, came back up Wednesday, came all the way down, held down there Thursday, came back up. This was Friday. And then over the weekend, there was some news on gold. And look at how we opened up this week. Monday, very strong A lot of 4-hour volume came from New York, the 10 a.m. candle to 2 p.m. Then we kind of consolidated in the afternoon. Here's the futures market open up, and there's London. This is the late 10 p.m. going into 2 a.m., and here's London. So majority of gold's volume came during London. This 4-hour candle represents 2 a.m. Eastern to 6 a.m. I know that London market opens at 3 a.m. So this is all pre-London. This is London market open. Everything in Europe, basically Switzerland, Frankfurt, all of this is all in there. So it was very bullish. It opened, look at the wick. There's barely any pullback, barely any drawdown. It just opened small pullback, still holding above 50% of that 4-hour candle. So this is where you can get in the habit of cutting candles in half. If I was like a 4-hour trader or swing trader, I would definitely be marking up my 4-hour point of interest, or exactly 50%. Look at the number. I just cut this body in half from the open to the close, and look at the number, 3680, right? So you see how these psychological numbers just keep repeating themselves over and over and over on all different time frames just by cutting it in half. That's me guessing. Again, you guys don't need to guess like me. I'm pretty good at guessing because I do the 1-minute candles, so I got to be fast at deciding where 50% of it is. You see it right there where I put the Fibonacci from the open to the close of that 4-hour candle. There's exactly 50% right there, okay? I could even draw a little bit of a bullish point of control coming out of that 4-hour candle and continue to stretch it into the future. I can see that we already pulled back. We're still maintaining above it. Came back to the opening price. Same thing. We filled. They were asking to trade. So look at the 4-hour candle. It filled the previous one. It continued to fill. There's another, if you want to have a white line. Now I'm dissecting white line 4-hour or 1-hour points of interest. There was one right there. Here's another one that was fresh volume. And you can see that 4-hour candle continuing to drive. I can see it just hit the highest point of the day and then sold off just a tiny bit. Now we're opening a new 4-hour candle, which opened up an hour ago at 6 a.m. And this one will close at 10 a.m. Getting ready for the next 4-hour candle. So this one will represent majority of all of pre-New York and Wall Street and COMEX. So this is basically our time frame. We're trading a 4 hours. We come in at 6 a.m. to 10 a.m. This is basically going to represent us. So I see it open up right there. And did it take out the all-time high or today's daily high? No. So it looks like it's kind of basically an equal high and tweezer top highs, and they're pushing it down. So it came down. That's our lowest point so far, and it's got a wick. Now, can we just determine off of this 4-hour candle? Maybe let's know our bigger point of control coming out of Europe, right? So grab your Fibonacci tool. I love this tool. It's very easy to use. There's the opening balance. There was the close. Now we officially see the close where it opened, how high it went. There is the 50%. So you see this white line where I had it at that previous wick right there. Now I just adjust it. I bring that white line up to represent 50% of that volume. And I can also find my 4-hour European bullish point of control right there, right? So if we're going to trade back in here, this could be where the 4-hour buyers are waiting to, possibly get a pullback and take gold back up to that all-time high. So that's how we determine where that is, okay? Are you guys following me, or am I going too fast for you guys, or it's good pace? You guys are following? So this is how I kind of freestyle, like I had that white line at that 4-hour, but then when I determined it off of that big volume, I kind of just adjusted it exactly. Where's 50% of that? And look at the number again. 3,690. You see how this should be making clear sense to you guys? Like sometimes I don't even have to look at candlesticks. You could just tell me what something is trading at and tell me the prices, and I'll tell you exactly points of control. I'll tell you points of interest. I don't even need to, I'm not saying this to be cocky or arrogant or anything like that. I'm just telling you guys are going to get to this stage where you're going to know these things without even looking at charts anymore. It's just psychological numbers on any security, right? So this is how you can kind of back test yourself by doing this, okay? So now let's look at patterns, right? So we see 4-hour candle breaking up. We can look at RSI. It's showing us we are still overbought, okay? It's showing a little bit of bearish divergence on the 4-hour, meaning that if I connect this top right here, this previous all-time high to our new top, you can see the price from this price right here and where it is now. It created those, it's continued to go higher, but from the peak right here where I just placed it, right here where we were overbought, and now where we are, you can see it is descending down. The strength is decreasing while the price is increasing. That's showing me bearish divergence. But it could just come right here at 70 and continue to gain strength and go right back up. And that bearish divergence is a false signal. Okay, so it's just good to know at the back of your head that there is bearish divergence. But for that to play out, I need to see the sellers really do something. So you see this leg coming up, and now we've got a bearish candle coming back down. So it has a high probability we're going to continue to come right into, test out 3690, that bullish point of control coming from Europe. A few things can happen. This big bear candle could cut right through there, and then it's next we got to determine where the neckline would be. Would it be more towards this yellow line, more at the daily? Would it be down in here where there's more volume concentrated in here? Or will it be in this green zone? So it might come in here, pick up those buyers, and then make its way back up to test the all-time high or daily high. Let's say it gets rejected up there again. Then we see a double top on the 4 hour. Then it could be coming back down and testing this and maybe breaking it with that more sellers, that second leg coming down. And there's your M pattern, right? So, but it could also, just come in here and just start breaking out, and then we got a new higher high, so we can't consider just selling yet. Like this could just pull back, get a wick, go back up, and continue driving, just like it's continuing to do. So we really got to watch this 4 hour candle, where it will close. There's still 3 more hours to go on this. It'll be a boring call if we just sit on this 3 hour candle and just watch this thing. Okay, so what we do is we dissect. We continue to dissect, right? So we're going to now, from the 4 hour, we've done some analysis on the 4 hour. It's still very bullish. We found a point of control coming from Europe. Now let's go cut it in, dissect it, and go into the hourly now. So now each candle is 60 minutes, 1 hour. I can see where it had majority of volume, Monday, 11 a.m. See how it was now consolidating, where you could have trapped all this garbage volume. Bearish, bullish, bearish, bullish, bearish. Big bullish candle coming out, futures market, 8 p.m. now. Now I can start to see the individual hourlies when they made these moves. Next hour, 9 p.m., they brought it right back down, came down. Then we started to build our way back up. That's 11 p.m. There's midnight. There's 1 a.m. This is pre-London. 2 a.m. 2 a.m. had a big bullish move on gold. Remember, the 4 hour just showed us a nice big bullish candle. Now when you're breaking it down to the individual hours, you can see 2 a.m. was bullish. London right there, London market open, was bearish. It came down but didn't break or engulf down below. 4 a.m. big bullish engulfing candle. Came right back up, ignited, engulfed that previous London bearish bar, made a new higher high, and closed above. There's that green block representing that 4 hour point of control right here. There's exactly this white line is that 3690 representing 50% of that block. And I can see now 5 a.m. we hit the all-time high, highest point, just 36.99, $1 short of 3700. And look right now, start of 6 a.m. it's a big bearish hourly candle coming all the way back down with 2 more minutes and 42 seconds to go into the close. So will they close it right at this green line? Will they start to close it inside the green box? Will we come back up the next hour? So this is what we gotta kind of decide. As soon as this hourly candle closes, I'm going to stay with this. Okay, I'm going to stay with this hourly candle right now since we have 2.5 minutes, because I'm going to make some observations off of this hourly candle. Is it going to be a bearish engulfing candle? Will it engulf that previous 5 a.m. candle? If that's the case, then we could continue with bearish momentum pushing down. But you got to understand, we're trading into that 4 hour strong point of control. So first thing is, I'm going to wait 2 more minutes to see if this bar actually closes engulfed. And what I'm also going to do is I'm going to get my Fibonacci tool from the opening balance of this 1 hour to where it closes, closing balance, and I'm going to figure out exactly where 50% of this hourly bearish volume is. I'll have a white line letting me know where the resistance of this 1 hour is, okay? So see where it came down, caught a wick real quick right now. So 90 more seconds to go. Our buyer's gonna bring this thing right back up. Is it gonna close? This is what I'm also looking at. Is it gonna close where this point of interest, where this body closed, this one opened? Is it gonna come back up and close right there? Because I wanna determine whether this is gonna be an engulfing bar. Will it completely swallow this blue candle? I gotta wait till it officially closes to determine that. And for anyone that's trading right now, whether you're in buys or you're in sells, just know that we're going into a new hourly candle in the next 1 minute. So when that happens, there's new momentum, new volatility in the market. There could be news, anything. So you got to understand things can change. Like here, this was a 1 hour, very big, strong candle at 2. And then look at when London, completely new hour and came all the way back down there. Then at 4, a new hourly candle came right back up. And then 5, it went to the highest point. Now we're coming right back down at 6 a.m. So let's just watch this close, 30 more seconds. I always say pay attention to the last 30 seconds of a candle. So sometimes I'm watching the last 30 seconds on a 5 minute, I'm watching the last 30 seconds on a 1 minute. Here I'm watching the last 30 seconds on an hourly candle. Okay, so there's the close. So it did technically close engulfed. It did engulf the previous bar. It just momentarily opened ignited bullish. So if it wants to continue to hold this bullish open and come back up, is it going to come all the way up and engulf this and continue to go for the new daily high or all-time high? I want to determine where 50% of that hourly candle is. So I grab my Fibonacci tool, opening price, it just closed. So now I can get full confirmations. I'm not guessing. There's the 0.5 right there, which is 36.95. If I just want to now find my bearish point of control of that bearish candle, that which engulfed, it's right there. So if the buyers now are buying it right back up, they might be trading into that bearish point of control. This could be a bullish candle coming in here, and it could get rejected in there, and then they push it down and then break this ignited open and come trade into this bigger green block where the bigger buyers are. But notice how the candle is ignited on an hourly. It opened strong, so it could continue to fuel itself and come back up. Notice there's 58 minutes left on this candle, so it's a lot of time, okay? But we've just determined where we've got a block in the market from the preceding hourly candle. So I want to see, are they going to make a lower high and continue to reject this move down? And then sellers might continue to bid down into this box, and we'll see what will happen in here, okay? So that's where we're at right now. If I dissect all of these hourly, and then I go into the 5 minutes, now more clearly I can see what the 5 minute candles are doing. I see this big explosion, big strong one at 410, then it pulled back. Where did it pull back into? 50% of that. If you were just watching the 5 minute candle, I guarantee you, if you grabbed your Fibonacci tool, okay, I know, see how repetitive it is? It's the same stuff. You just got to pick what time frame you prefer trading on. There was the open close. That's an abnormally large candle. It closed above all of this structure. That's a statement candle. That's a candle that you would want to analyze. Like this one is nice down here too, but this one is not significant. It kind of didn't really, it came up, but sellers could have just pushed this down. This was a statement candle where it closed above all of this structure. So right there, there is 0.5. If I was to find a bullish point of control off of that fight, I could have right there. You see how it came right in and it bought right out of there, okay? So you can see how you can do this on lower time frames. If you stretched it into the future, it came back in there, it's still holding, went back up. If we stretch it in the future, look, we're trading right into it right now again, still of that candle. So if we lose this minor green zone, we're gonna trade back into that bigger one. I'll get rid of this right now because I don't want to confuse you guys. We'll watch our bigger zone. But that's how you can do that, guys. So now I can see that we continue to move up. This is where we hit the highest point of the day now. So there was 3 attempts to break out right there. 550, 555, and new hourly candle, 6 a.m. They started to move it down, pushing it down. See that nice big bullish ignited open, that hourly candle? See, remember where it was bullish ignited and it was coming up, and that's my hourly red box. And I see that they just rejected it with a lower high and bring it right back down to the opening balance where there's a tiny, tiny wick on it. But buyers are still there, you know, trying to buy it up. So let's watch this thing. It's going to close in 90 more seconds. Okay, so get ready, guys. Just have a peek at your spreads if you're trading Forex. If you guys are trading futures, you guys don't need to worry about that. Okay, so now you see how they turned it into a shooting star candle. So if you look at that hourly, remember that hourly candle? It opened bullish, 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 came right, didn't transact in the box, lower high, and then they flipped that hourly candle. So this hourly candle, if it gets more momentum, could continue to drive down into here, okay? That's the first 5 minutes of that hourly candle. So when we look at this 5-minute candle, it's going to close in 47 seconds. Okay, guys, if you learned a little bit about that analysis, it was a little bit more in depth, hit the like button on YouTube. We almost have 500 viewers. Subscribe to the channel if you haven't subscribed yet. Let's see if we can hit a psychological number in the next few days to 85,500. Look at that shooting star candle coming down, okay? So where were the last 5-minute lows? Those wicks right there. 3691.66. Will it come back down there? Will it go back up? Will we get our next leg coming back up? But they pinned that. They really pushed it down. So it says shooting star candle. Here's the close. Okay, so will it open bullish and come back up? Are they going to reject this? So see how quickly it turned bearish and coming now. Now we're transacting. This big this big green box, remember, is the 4-hour point of control of support coming from Europe. Okay, so we're trading right back into it. So now we got to see, are our big buyers going to be in here to get triggered and take this move back up? Or is this selling pressure really strong, going to cut right through this zone? Okay, so right now it's coming down. It's bearish, basically ignited, pushing down. It's going to test this wick and this wick. Is it going to be an equal low? Is it going to hit that red line and go back up? No, I can see the black volume is a little bit below it, so it broke it right now. So this could be an impulse candle that just breaks down, coming down here. But it could get a wick and turn right back up. So you have to be very careful, okay? We either have to wait for this body to close or show us how low it can go. Right there, see the wick now? So it's got a wick. So now I know that those buyers down in here are getting filled, right? It's coming down there, hitting some pending orders. But it could also be filling selling orders at the same time. So if I want to continue to trade with the trend, what is the overall trend? It started right here, lowest point of the day. There's a higher low. There's a higher low. So if I just attach a trend line, starting like at the lowest point of the day, that wick, I come right there. See how I just attached it? A to B. Let's see if we can attach it to C. To go to C, see, I kind of got to break that, right? So if I want to keep it honest, I keep it at A to B. I know that C was coming in, but they held it back up. So if I continue with this trend line, see, right there would be the D point. So that's A, B, C is right there, didn't touch, and then D is right here. Is it going to touch? So if I have my trend line, I could still have my overall trend line still telling me it is still bullish. So in order to get bearish, sellers got to break that trend line, close it. You know, there's that 50%, that white line, maybe close it below there, because if it comes back up, that white line could be resistance, trend line, that's resistance, maybe in there, then they might have the potential to continue to break it down to down there. But I want to watch and see if the buyers will hold this and continue to build out of here. And then I want to continue to trade with the overall trend, which has been bullish, right? Maybe that was just the last selling leg. So this candle now came right down in there, caught a wick, coming back up. So far the volume is still bullish above here. Where will it close? Will it close engulfed above here like a hammer candle, and the next candle could continue, maybe come back down here, but we got to fill that wick and continue to break out of that supply block. We could get some consolidation here. Some traders already are in buys on this candle. We could continue to wait it out and see where it closes, right? Okay, so you guys understand how I did that trend line? Everyone is different the way how they do their trend lines. Like I could have, I could take it back up to that line right there. I could go there, and then that just shows me that there was a little fake out. I continue there, but it's kind of, I want to keep it consistent with connecting the dots from point A to point B. I can see what happened with point C, but and then I can see what's happening right there, and we're still holding the trend line. We have not broke it yet. Okay, I know this is a bearish leg coming down, but it's still upholding our trend. This is the 4-hour European bullish control zone. So I technically want to continue to buy, I could buy and then it goes against me and then that's it. Then I know that the sellers are strong. I exit the trade, I get out of the way, and they confirm to me that they're stronger than the buyers. But overall, I want to trade with the bullish trend. The trend is my friend. I want to look for maybe potential opportunities to buy it back up. Okay, so here's the close in the next 43 seconds. Let's see how we close. Do I have any pivots on the 5 minutes? Yep, right there is the one pivot point where it came down and it stopped right there and went back up. See how that bearish bar broke and closed right below it, and then the volume below that red line, that was a big strong bullish candle coming up. They rejected it back down, closed it near the low. Now we just came down into there and now we're coming right back up bullish. So you see how that red line used to be support, turned to resistance, and it's resistance right now. So let's see what will happen here. We have a very nice bullish hammer candle coming right back up, going into the close with 5 seconds. So let's see how we can close. Notice the size of the wick. This next candle could open bullish ignited and just take right off out of here. There it is, bullish. Small wick, so there's the bullish ignited open. So this could kind of be an impulse break above that red line to fill. So we're getting now a rejection, so it's coming down. Is it going to hold 50% right there of that blue candle that we just had? Or is this candle going to come all the way back down and engulf our candle and come trade even lower? So that's what I'm watching. See how it's coming down, coming down? So it's got a wick so far, but it's still coming down, coming down. So we never got a wick exactly right at 50%. Okay, so it's coming a little deeper. Can we still maybe get a higher low without breaking the opening balance of that blue candle? Will it grab a wick now? Or is this selling candle going to continue to come down and engulf our bullish candle and then maybe drive one more leg down? We are consolidating, like right here now. Okay, so if I draw a neutral zone, I can see now bearish, bullish, bearish. Okay, I could bring my consolidated zone all the way down to the red line, but I'm keeping it right at the green box, right above it, and at that red line. So I can see now how, it's kind of building right over here. Okay, so it could be a bear flag and continue dropping down, but it could also start to gain that higher low wick and flip, and then it could be an impulse breakout, filling back up. So do you want to continue to drive with this momentum? Okay, see how it came right back up to that red line. Get ready. It went back down, could be refueling itself, could be a hammer candle impulse breakout. So there could be intuition when you trade these, because this is 3.5 minutes to go. So I'm going to take it. I'm going to go in a buy and see if this thing can continue to fill up and get up to that white line right up there, okay, to 50% of that hourly point of control up there, okay. I'm going to place my stop loss. I could place it just right below that red line, below that previous wick. I could go a little bit deeper if I want to go all the way, be right under 50% of that point of control. If I'm going deeper down in there, giving myself a bigger stop loss, my reward is going to be bigger to maybe clear that entire red zone and maybe trade just a little higher, okay? So I went on an impulse trade, it came all the way down, it turned into that hammer. That's when I bought out. Again, this might come back and kick me in the nuts by buying that impulse candle, but sometimes when I buy those, that's when that hammer candle is breaking out and filling that wick. So they got me there. So now it's coming down. So now what I got to do is, I'm in the trade, can't make excuses now. I went in, I just got to continue to watch my depth of market. So see where it came down, got a wick. This body is going to close in 2.5 minutes. So it's still a lot of time. Anything can happen in 2.5 minutes. The buyers can continue to ask to trade back up here, and maybe I could get it back up there, closing above, and then continue to take off, or sellers will continue coming in and bringing this thing down, okay? So when you're in a trade, whether you take an impulse, you take a confirmed trade, you take a retest, the next thing you got to do is how to manage your stop loss. So you see, I'm just placing it under structural levels. underneath European strong point of control down there. I gave it a little bit more. I could have put a tighter stop right there, but then my reward would have just been coming up to the red box. So I went bigger to allow it to accumulate, and then my reward is also bigger, okay? So let's just see what happens. Let's wait for this body to close. It's still trading in this consolidated area. Oh, sorry, I didn't add the EMAs, my bad. Okay, there's the daily bar indicator. Okay, so it's showing still we have strong daily candle. Opening balance are low. We came all the way back up to the highest point. So there was that retracement. So maybe we could continue with our daily candle, just filling a little bit up this wick. And then that would provide us with a little bit of profit going back up. And then adding our EMAs, EMA 9. Our EMA 9 is right above us. Okay, it got rejected on that big bullish candle right there that started 7 a.m. So maybe we'll get our volume back above there and get it above that EMA, but it's above us, so it is resistance right now. And our 200 EMA is all the way down in here. So let's see where we can close with this volume. Okay, so we got a good return so far. It came higher low, got back up, but still we got this red volume. Sorry, black volume, bearish volume. So it's continuing to come back down. You know, if this black volume engulfs this bar, then it could take that next leg coming down, okay? So we got to close now in 24 seconds. I like to watch the close, going right into the close, last 30 seconds. Kind of shows who has momentum going into the close. So close basically right at the point of interest on those 5-minute candles, okay? So seller right there. See where that point of control is? Body close, body open, body close. They opened it bearish, so they're coming a little deeper now into the green zone. So will it hold this red line with a higher low, or right there with a higher low, or is it going to come down and break that wick and drive a little further down into here? Remember, the best area is that white line, and it's located at our trend line. Will it come all the way down in there and trigger all of those big orders down in there? Or will it cut right through this thing? So let's see right now if it gets a higher low right inside here. And this is my position 1, right? If I'm still building with this, if it still builds and comes up here, and get what I want to originally happen, where closing with volume and I'm still alive in this trade, I will add a position 2, okay? So I said I was going to do that yesterday, but I didn't announce it with you guys, and I didn't. So today I will announce it. If I'm still live in this and it's still building inside this block and it comes back up and does what I want it to do, I will add a second position, okay? So I'm making that verbally clear to everybody. If I'm still in this thing while it's accumulating. Okay, so if this block, I know it's a strong block coming from the 4-hour from Europe, but the buyers got to be here, right? They got to be above this white line. They're showing me they're still here, but it's trading inside here. It's a lot of selling pressure coming down into here. So there's going to be strong orders inside here. There's going to be selling orders. There's going to be buy orders. But so far the sellers are in full control. Okay, so I'm not going to add my second position if it's very bearish. I know I could get a discounted buy down in here. I could add, but what if this is a bearish candle closing below here and continue breaking down and it cuts right through this zone? So I don't want to add a second position unless I got strong confirmations that it's coming back up. Like those wicks help with confirmations, but I've seen during this candle it came up, back down, came up, back down. Okay, that's not helping the cause here. I got to see it really come back out and maybe close above this red line in order to go back up bullish. And we're 1 hour away from COMEX and an hour and 10 minutes away from the US retail news. My final stop is down there, okay? Because I don't want to continue if it's bearish volume, it could cut right through here, and I don't want to stay in a trade. So I'm giving it the benefit of the doubt for it to come in here and start to accumulate these orders. But if the sellers show me that they're stronger than the buyers, you know, I got to throw out that this zone out of my analysis, right? If the sellers are continuing to trade down into here, close it down in here, they could come right through this zone, close it below here, and then we would have to flip that entire green zone to a bearish point of control coming from Europe. Then it would really, really change the sentiment of the market. Then gold looks like it wants to continue to sell. Yeah, I know some of you guys are in sells, I understand, and some of us are in buys. Welcome to the world of trading. Just like in this block, there's buyers and there's sellers. Again, I'm not over leveraged, right? I placed my stop loss down here, gave it more room to breathe. I went with a lighter sizing in order to accommodate the larger room to allow it to breathe, right? If I went with a tighter stop loss, I probably would have been stopped out by now. But I gave it room to breathe for a specific reason, to see if it will come in here and gather these buyers. However, these sellers are strong, and it's going to close in less than 1 minute, and we're near the lowest point, and it's made lower lows and a new lower low. So now we got the last 30 seconds again. All of these red lines are based off of the 5 minutes. Okay, so it's the resistance now against me. And here's the close in 5 seconds. So if it closes below, that red line is still resistance. That is resistance. Okay, so it closed below. So you see how the wick printed just as it opened? So it kind of already retested it as it opened. So it looks like they want to continue to push it down. But now sellers got to continue to, it's a pretty big wick. It's not a small wick. So they got to continue to push down, push down, push down, push down in order to create that new low. So they are coming down. So I need to see a higher low being formed now, because we're getting close to that trend line and that 50%, that white line. So I really got to see buyers, you know, starting to ask to trade back in here at the top in order to prevent this from breaking down. Okay. But there is significant selling pressure. So if you guys are selling, you know, the market is pushing down rather nicely. I'm just here to determine whether this point of control is still going to hold up. Okay, so it got a higher low wick coming right back up, but remember that candle opened with that bearish body continue push down. So the buyers have not flipped this point of interest. They haven't even came up to the opening balance in order to flip this candle. So sellers are still offering and continuing to push it down. There's the black volume, right? So it's still accumulating all of those buyers. So then the sellers could continue to come down the wick, come down, and then create that new one. So my final stop loss is right there, guys. I'm just below 3690. I'll verbally let you guys know as soon as I get stopped out. Okay, so that wick, you know, right there is going to be the equal bottom lows. So far, it's holding at that previous low, but it's getting real close, real close. Okay, good return up, but again, I don't get excited for returns. I get excited where candles officially close. Okay, so there's a good return, but the body is still bearish and could continue to absorb all of that and continue coming back down. These buyers need to come back up to the opening balance and flip the candle. We'll turn it into a bullish pin bar and then maybe drive back above here and test 50% of that. Every time the buyers come up, the sellers are there pushing it right back down. Okay, so it could come down and continue come down. Then it's coming down from a higher time frame. It's not coming down from these 5 minutes. It's coming down, this bearish momentum is coming from the 15, from the 30 is pushing down, so it could continue. But remember, this is that 4-hour point of control coming from Europe. So we're watching it, we're witnessing whether it will still hold up here. If not, it could break down. And then it could start that flood of selling pressure. Sometimes those wicks are deceiving. You know, when you get that nice return, they're deceiving. Sometimes you'll see a return and then it comes right back down. You'll see another nice big return and then they'll push it back down. You'll see a third return and then they push it right back down and then really hammer it down. And sometimes if you get stopped out right below a point of control and then it goes right back up, it happens. It happens. It's happened to me a lot of times. But I don't want to get in the habit like I used to, where I was just, okay, I'm going to give it more room to breathe, more room to breathe, more room to breathe. And then it just kept coming down. And then I'm taking further losses. So I put a disciplined stop loss in the market right below this point of control. It was just my entry was a shitty entry. It was on impulse. And you see, let this be a lesson to most traders. If you trade on impulse, shit like this happens. If I was waiting for it to close above there, I wouldn't even be in a buy. I could be buying deeper down into here. So shit happens. I'm happy if I lose on this trade. Let it be a lesson to you guys that Ron took a stupid impulse trade. You know, one thing is we all make mistakes. This is, I admit, this was a big mistake on my part. I make mistakes, but one thing I don't do in trading is I don't quit trading. Okay, I make mistakes just like you. I'm a human. But I don't quit. I learn from it and I come back stronger. Okay, so my entry was terrible. I thought my analysis was going to be a bullish breakout coming back above there, and they rejected it. Had I been a little bit patient and waited for that body to close, I don't even think I would have taken a buy. I probably would have been starting to take a buy down in here, saving myself all of that drawdown. And then if it returns back up, I could literally be in profit, but now I'm in drawdown. Okay, so it came right down to that trend line. It came right down to that 50% marker from Europe, the 4-hour block. This candle did open ignited bullish. It did push up and then it came back down. Did you notice it still held its ignited open? It kind of refueled itself second time. It is coming up, but we are coming up against resistance. So it could just come right back up and then they push it right back down, and then maybe we got to consolidate in this block and see who accumulates more. Okay, so I'm still in drawdown. It's a nice bullish candle, but it just opened. That's 45 seconds. So it could just come right back up and they could just bring this thing all the way right back down. Okay, but what we need is we need buyers to continue to ask and trade and maybe close it back in this neutral zone. And then I know that they picked up a little bit of this depth of market exactly right there, right at that white line, which was 50% of Europe, 4-hour point of control, that 36.90, and we have a bullish ignited candle following up with it. So still, in my opinion, it's still bearish. We haven't closed with a bullish engulfing bar. We haven't really created any new higher highs in the market. So it could just be one of these, like these type of candles, could just be a counter trade, and then they continue pushing it back down. But at least we got a good response exactly right there, showing us that there is big buyers willing to step in exactly at that point of control. So again, if you're learning anything from me, that would have been an ideal area to initiate the buy right in there. Shit happens. I just gotta, let you know what happened with me. I personally thought when it was breaking out there, it was going to be that impulse, because it already tagged inside this green box, and then it started with could have been filling that wick and driving. However, selling pressure came in a little bit deeper. We triggered that, and then we got a good response. But again, it's how this body closes. It would be unfortunate if we lose all of this volume. We come up here and then it gets rejected all the way back down. So we really got to follow through with this candle and see where it can close, right? Still a lot of time, 2.5 minutes to go on it is a lot of time. Okay, so sellers could step right back in and push this thing right back down right there. So it's at that point of interest, that red line. Can the volume close above that and build off of it? Can we close it back above this green zone, or are the sellers going to just step right back in and push this thing down? But man, you know, if you targeted like that right there, like that would have been like the best entry. You know, just to grab 20 pips straight in profit could happen, but lots of selling pressure. Holy shit. Okay. So, you know, gold has got some selling pressure. That was a nice big body candle that was coming all the way up there. They've rejected it back down. Man, it's going to suck if we lose all of this ignited bullish volume, because then if it comes down there, it's got a high probability then it will break this and, you know, trigger all of this down here. So I'm hoping that's not the situation, but I got to be real. It could definitely happen. Am I in buys? Yes, I am in a buy. Yep. In drawdown, holding right now, but in a buy. Okay, so 60 more seconds going to close. We have a nice bullish candle building, but let's see where it will close, right? Will it close above this red line? Can we build off of this? Then we're back in that consolidated zone. And then our 4-hour control zone is holding strong, exactly right at our 50%. Wow, Huddlestone, you had a buy limit on that white line. Nice. Did you get filled? You guys should have told me to taught me. That's a great. If you had a buy limit there and you got filled, that's nice. Congrats. Let's see if we can build off of this, okay? So let's continue with this volume, right? When we're in a trade, whether we're in profit or we're in drawdown, we still got to follow it, okay? So let's see what the market is showing us. Strong bullish candle. Will it close above, right at that line, or below? Here's the close. Right at it, below. They kind of just pushed it below. That is, believe it or not, that's very significant. I'm very technical, okay? You know, just that little push down, that could have opened this candle bearish, ignited, and drove it right back down. But thankfully, we got a good response. We got a bullish ignited open, you know, with buyers asking to trade right at the opening balance. So we filled our wick, and now we're traveling right back up here. So this was my impulse move that I made that mistake, but now let's see. Okay, still resistance. We haven't closed with a bullish body above here. Will we get an impulse break? Will we get volume close, or will it just come right back up here and then we're going to have our leg coming right back down? So I can already see what the 5-minute candles are doing. We had our leg come down, targeted area, great. That's where we wanted our buyers step in. They did. Okay, so now we're coming right back up. So there's the neckline right there. That where I bought is the resistance right now. So it came up right up there. Sellers could push this thing. If we come back down, you know, will it test again this red line? There's our trend line, could be a higher low, or it's going to come all the way double bottom back down in there, right? You're building now. You can see our second leg, but will it come maybe above here, close above here? Then if we pull back, this could be a supporting area, and then we could be driving back up to that intended direction, okay? So let's see if our depth of market can continue to hold up, but we need a strong close. Why? Because we have resistance right here. There's a red zone right there. Okay, and then you see how that candle opened real strong, bullish, right there at that neckline, and rejected right back down. Okay, so this is where we have our short-term resistance. So it could cause another leg to come back down, but hopefully our depth of market is building on the higher time frames. We're still above our trend line. So now it's kind of in this consolidated flag. We found our neckline. We know if buyers can close it above here, we can flip this, maybe turn back up, but sellers are still there. They're still strong right up there. So we're going to wait for this body to close. And it's a new 30-minute candle. It is 7:30 a.m. Okay, so you can look at your 30-minute candle. That is our resistance right there. So can we get 30-minute candle pushing back up? It just opened a couple minutes ago. I like to watch them on the 5s. We still have a strong daily candle behind us. Okay, we haven't lost any big selling daily volume. So we just need a strong close on the shorter time frames, like 5 minutes, 15 minutes, and then maybe we can make one more leg coming right back up, testing that hourly resistance, maybe break above it, and we're not too far away from that highest point of the day. Okay, but this is going to be where the battle starts. We've figured out now the neckline. And sellers are there. You can see every time we come up, they push it back down. Come up, they push it back down. So we got to continue just asking to trade up here, maybe close strong and have possible short squeeze coming through here. All of these sellers, stop losses are above here. Same with all of these buyers, stop losses are probably below here. So one side is going to attack. You know, the buyers, can we get it above there, cut through all those stop losses and trade back up there? Or opposite direction, sellers are pushing it down to break this so that they can trigger all of the buy stops down in this lower half down in here. I'm hoping option one is the case over here, but man, every time it comes up there, this area, 36.93.94, shooting star candle coming right back down. So sellers are still strong. We figured our neckline. Now we got to come back down. Will it test, 50% of this bullish candle, which is right there where I just moved my red cut line. And then 25 seconds to go into the close. So are we going to get an indecision candle, spin top, right? Where buyers were buying, sellers are selling, buyers are buying. It could close virtually right where it opens with like a coin toss, right? 50-50. But we got some bullish volume coming into the close. Look at it coming right back up the wick. Here's the close in 3 seconds. Can they close it strong? Will we get that impulse breakout with that momentum? There's the opening candle. Okay, so it is black showing with a now turned blue. So we're not too far away from breaking that wick. Again, there was a strong close. So remember, it was coming all the way down. It was a spin top. Then the buyers ended up asking to close right near the high up there. Now again, we're bearish, but can it continue to build higher lows, higher lows, higher lows, and again attack to build breakout of that neckline? Okay, so it could be now that impulse could be now building with all of this accumulated volume down in here. Now they could break out of this with an impulse. I would welcome an impulse breakout, because we have to create a new higher high in order to continue to develop the depth of market. So we don't want to just come up here and just get rejected back down. So we want to make an impulse break above here. Okay, so that is an impulse break technically. Pushing above here, we've created that new high above that high. Now we're trading back in here. So now what we got to do is we got to follow the bullish volume. Will it close above here? Because I would need it to close above here so that I can convert this red box back to a green box. So if we pull back down, we could be developing support there and coming right back up. So now it's filling this wick right here. It hasn't completely filled it. That is technically a lower high. So can it fill that wick and then start to drive into our hourly bearish point of control? And that white line is representing exactly 50% of that previous hourly candle at 6 a.m. Okay. So that is technically a lower high up there. Okay. So far, remember that wick. Okay. So we came up there and they pushed it down. So can we get above that wick? That's our resistance right there. Again, they're pushing it back down. 3 more minutes to go. So again, sellers are strong. Sellers are strong. They've rejected all of that bullish volume coming through there right now. So now, buyers are refueling it up again, buying near the opening price. Can they continue to come up that? That's a rather big wick to continue to drive up, but it's ultimately going to come down where the closing price is. See, now the sellers are in control back below there. If they close it below here, then we got a wick and a wick. Then it's going to possibly make the next leg bearish coming back down, right? So if you don't like the trade setup, guys, you could be near a break even. Like right now, I'm at a break even. If I don't like this, I could just end this trade like right now. I was in unrealized drawdown. I had unrealized profit. Could be right back to break even. I don't like how it's looking, for example. I could just close this right now and regroup and look at the next leg. However, if I'm going to continue to hold, I've got to continue to watch where this volume will close. So we have 2 more minutes to go. Big fight of this zone right here. But for learning purposes, guys, see right there, someone in the chat got filled right at that white line, and you're right into direct profit with 0 drawdown. So it's kind of nailing those entries. Well, man, looking back at this, I got a mosquito in this room. Looking back at this, oh man, that impulse trade killed me right there. But I still relied on my depth of market. That's why I placed my stop loss below there. So you're learning also stop loss placement as well. Okay, so I'm back in profit now. It's good, but I'm now going to wait for the body to close in another 60 seconds. Okay, so we got to continue following. Will it close above this red line? Will it get into our red box? If all of this volume closes above, get ready to convert your red zone green. That's a strong candle. Beautiful. Okay, guys, I'm just going to measure it. So if you guys start, consider it, reducing your risk. Up to that white line is 20 pips exactly, right into 50% of that zone, okay? So let's watch this now going into the close. So you see we came through there. I guarantee you we're chopping up all of those sellers' stop losses right now. So it's a game where they could have taken out my stop loss. Then they win. Now it's a game where we're coming up, could be taking out their stop losses, where we as buyers can win. So fortunately, that's how the markets work. Some days we stop out others, some days we get stopped out. That's how trading works, guys. Just don't over leverage when you're trading. That's it. Because if you were over leveraged in that drawdown, you probably panicked and you got taken out. And when other traders were still in here, we're breathing. Okay, here's the close, right at that red line right below it. So red box to green, just go through the motions in case it comes look at it's coming all the way back down for a retest. Okay, so will it get that wick? It got a wick so far, but notice how strong it just opened, ignited bearish and just dropped, right? So there's a lot of resistance right at that red line right there. The candle went through there, closed right below it. They opened it, bearish, ignited, and just dropped it down, okay? So we're gathering a wick right now. We haven't retested our green zone. It's holding so far a higher low. Now, buyers have a big job to do. They got to continue to ask to trade up here after it just got rejected and a big bearish ignited candle just dropped down. So right there, they flipped the candle right back to the opening position. So they've gathered all of that momentum. Now they flipped it. So now the job is to fill that prior wick and then drive through this hourly bearish point of interest. Okay, so that was a beautiful pickup by the buyers. That was beautiful, guys. It doesn't get any more better than that. That was a big bearish ignited candle that just dropped, and the buyers were right there at that point of interest where we flipped that red zone green and just above it, and they gobbled all that up. They've created the new higher high. So now we could be getting right up to that white line. That's up 20 pips. That's where you can start to reduce your risk in this trade, because we are trading into an hourly point of interest right there. Okay, it's a bearish point of control. Okay, so I see some of you guys took your stop loss to BE right now. That's fine. You could also learn how to scale out up there, or just continue holding the trade and let's follow the volume, right? Let's see where it will close. Sometimes when you want to continue to build with the trade and you don't go to a break even, it could come all the way back down, and then you got to go through the drawdown phase again. It happens, okay, guys? But we got to know where we're also trading. We're trading in an hourly bearish point of control from the previous hour. So where did I get this from? Remember the hourly candle right here, the 6 a.m. candle right there. That was, now we picked it. Look at the hourly came all the way into that white line, that 4-hour point of control, perfect area. And we're getting our response coming right back through there. Okay. So this hourly volume could trade at the top of the red box, maybe a little higher. That's where kind of I'm looking for TP above there. Okay. So you see, we got a beautiful candle now cutting right through. Okay, so it's going a little higher up there, 20. If it can get up to the top of that red box, could turn into 25, possibly 30 pips to the upside, okay? But again, higher highs, higher lows, volume close, continue to follow if that's what you're doing. But if it starts to break out of this red zone, go up 25 to 30 pips, I will definitely be reducing my risk in this trade. There we go. There's a good push, okay? So we got out of there, okay? So that's approximately 29, 30 pips up there. It broke through. Sometimes when it breaks through, you're going to get a sharp rejection coming back in. So we got to watch for that candle to continue to build. Also, in the next 90 seconds when it closes, will it close above this white line? The white line is very important because that's representing the hourly resistance, 50% of that point of control. It could turn into support going forward. So if we close above here and we pull back, we might be building a wick or support at that white line. So if we can close above this red zone, we could momentarily flip that hourly point of control bullish for our hourly candle that we're in right now. Awesome. Captain Boom, man. 80% daily goal met runner. Perfect. Excellent. You're doing this like clockwork, Boom, on a daily. So on a daily basis. Perfect. Okay, so we basically escaped a little bit of drawdown down there. I explained my entry, shitty impulse entry, but stop loss placement was correct. Man, looking back at this, why did I take that impulse? You know, the woulda, shoulda, couldas. It came a little deeper down in there, but we got to continue to watch this close. 15 seconds to go, so pay attention to the close, guys. You guys got to be able to do this ahead of me, okay? Because sometimes I'm looking at other things. So if it closes above here, just watch. Where's the close? 3, 2, 1. Close above. Okay, it did close above. Red to green, quickly. We've just inverted our hourly point of control. So it opened bearish, coming back down. Will it catch a quick wick, short wick, and can we just pop now? Just drive. It's got a short wick, the firecracker. We caught a shallow pullback. All it needs to do is just right now, just basically just drive above that wick, and we're driving where? Possibly to the next points of interest right up here, to those bodies right up there. So I could kind of increase the target, get it up to that red line. Okay, guys, so that's about 30 pips, okay? Now it got rejected, so now it's coming now. We flipped our green zone, or sorry, we flipped our red zone green. So see how it came a little deeper down in there? We're still above the white line. There's a little fair value gap for your fair value traders. That wick and that wick, you could attach it. I've already figured out my fair value gap inside this hourly point of control. It's right there. Okay, so you see that wick, our low right now, and that previous low, that meat of that candle, 50%, there's our white line. There's your fair value gap, okay? So if it can continue to hold this, we could continue to build our way to get up to that red line, and we're not too far away from the high of the day right there, okay? So up to there is about 32. If we can get up there, is about almost 38, 40 pips, but it might need to continue to build up there. This is where I would suggest, guys, up 30 plus pips, you should be at break even. That's what I'm going to do. I'm going to go to break even time now. Okay, so I'm at a break even, escaped that drawdown. I'm back to break even in profit. I haven't scaled out anything because now maybe I want to see if my higher time frame zones can hold, and maybe we can get that bigger reward up there. Again, I could be getting greedy, so this could come all the way back down and hit my break even. As long as I don't have any capital at risk, I'm okay, right? I've kind of de-risked myself. I was in the drawdown, came back up. The trade worked out, but I still haven't taken out anything, okay? So that could be my downfall, that you guys might learn another mistake I'm making. However, if I'm going to continue to go with the structure of the market, I'm watching. I flipped my red zone to green. I found my fair value zone on the lower time frames. So now it's coming down bearish. So I got to rely again on these zones. There it is. Got the wick exactly right at that white line. It is now holding. So that's that momentarily hourly support that we flipped. Now it's coming right back up. So can we flip again that volume? Just go back to the opening balance and then fill our wick and continue to drive, right? So you see how that retest right there, right exactly at the white line at that flip in that bullish fair value gap, okay, on the lower time frames. What does the white line mean? It's an hourly point of interest. It's exactly 50% of that hourly green box that we figured out from the 6 a.m. candle. And this white line was the 50% of the 4-hour point of control we figured out on the 4-hour candle coming from Europe, from the 2 to 6 a.m. So this is why, guys, top-down analysis is very important, okay? I can't stress that enough. It can set you up for success every single day when you're trading, okay? You know exactly where the big buyers are. You know exactly where the sellers are. You know where the point of control of that candle is, the volume node, okay? The highs and lows, if you look at a volume profile, have very, very low volume traded at the highs and lows. The point of controls, the right in the middle is where the point of controls, where the high volume trades. We got a beautiful bullish candle coming right out of there. So you see how it retested? So sometimes when you see a bearish candle, don't get scared, guys. Rely on your zones, right? So now it's moving back up into profit. We're going to close now in 1 more minute. Okay, so where will we close? Again, there's our resistance. 50% of that bearish candle at body and body. If it gets up there, that could be about 38 to 40 pips. You know, breaking out, filling those wicks behind could take us 40 plus. And we're just right at that high of the day. So if the sellers really, you know, push this thing down and protect that high of the day, we should be looking to secure a little bit of profit, okay? Here's the close in the next 25 seconds. We're moving close to that resistance right there. Can we break out just a little bit more? Maybe grab 40 plus pips. Okay. So on that break, I'm going to take out 80%. Okay. I'm literally taking out 80%. I'm verbally telling you guys, and I'm going to leave 20% running. Okay. So I just did that. I took out 80% right there on that pop, and I got 20% running to see if we can drive to that highest point of the day and maybe break out. So see now this line, it turns from resistance with volume closing above to momentary support. I could just bring it right back down just to represent 50% of that candle, you know, just the point of control of the candle. If we continue to retrace down, maybe we'll catch a point of control and continue to go back up. But guys, target would be obviously the highest point of the day if it gets up there. But I've taken out 80%. I've de-risked. I'm back to break even on the 20% runner. So nice, Justin, you hit TP 50 pips. Congrats, bro. Guys, things happen, you know, but hopefully I explained that to you. Okay, we're here to do live trading, but analysis and help educate. Okay, so that was a trade I took on impulse. I made a mistake. I admitted it. I was in drawdown. I gave it more room to breathe, right, below this 4-hour point of control, and my reward, I made it bigger. There we go. So that's a new high of the day break. Okay, so now how do you analyze above here? Remember, we did our top down, okay? So above the purple line, what do we have? 5 minutes, anything? 15 minutes? 30? No, where are we? You got to understand where we're trading right now. We're at a new all-time high, okay? So this is where now you got to use your psychological numbers, right? So it was a good idea that we continued to trade with the trend. There was a nice sell, beautiful selling, as well. Those sellers sold. Thank you for selling, because you brought it to that 4-hour point of control for long buyers to get filled and take it to a new all-time high. So we just tapped into what number? Did we hit 3,700 on the dot or just a few pennies below? 3,699.20. So if it gets up to that psychological 3,700, you know, it's right there. Okay. But congrats, guys, if you guys got some pips. You know, this is all now price discovery up here. We got to continue to go with, if it closes above 3,700 builds, we're looking at 3,705. We're looking at 3,710, 3,715, right? Online auction. If you're going to continue to hold gold or watch, okay, so you see that previous purple line, there's a wick, a wick, a wick, and two bodies. Guess where I'm going to draw a red zone, okay? I know it sucks doing this in a buy, but I need everybody to understand. There's where I got 3 rejections at the previous all-time high, daily high, body, body. So if I stretch this into the future, you can see we're kind of literally impulsively cutting right through this. Can we close above this? If we do in the next 2 minutes, I'm going to flip this red box green. We could continue to build off of this and create new all-time highs and continue to drive through here, okay? However, if it just comes through here, it could be an impulse, hitting that 3,700 psychological and getting rejected, and it will start that next leg coming back down to trade into this green box, okay? So when I'm all done, like kind of getting out of a trade, or I clean up my cut lines, I leave my bigger zones, and just continue to watch. So we learned a lot, guys. We learned 4-hour points of control right at 50%. That was a sniper entry for, I saw some of you guys got filled down there. This one was our red hourly 6 a.m. bearish point of control. We flipped now bullish. That was that fair value gap that we figured out on that 5-minute candle. And then for my 5-minute traders, you guys fair value traders, you see how it came down in there, gobbled right back up and continued to drive. So you see that wick to that wick, there's still a little untapped area right there that hasn't been tapped. So you can kind of stretch these zones into the future. That's the beautiful thing about doing this. Okay, so now we're got the volume back above there. Where will it close? Again, just go through the motions. If it closes above this red zone, flip it green, because it could provide liquidity if it pulls back and continues to drive, okay? But anytime a trade goes 50, 60 pips, just please, guys, at least take your break even. Stop loss go to a break even, but also scaling out. There's nothing wrong with that, okay? So hit the likes in the chat, guys. We got 700 viewers. Subscribe to the channel if you guys haven't. Guys, we're here daily with you guys. You guys continue subscribing to the channel, liking what we do here. Keeps us motivated, keeps us bullish to continue to come back. We're ignited with education to provide for you guys. You'll learn from a few mistakes we make. You'll learn from good things we do. But one thing you're going to learn with SST is we don't give up. I've never given up on trading in my life. When I first started, yes, I struggled probably more than any of you guys, but I don't quit, nor should you guys, okay? You guys might be going through some tough times in trading. It's fine, but don't quit. Go back to the drawing board and learn how to trade. See that, okay? So they rejected us hard. Look at where the volume closed, below that red line and dropping back down. That's why, guys, you got to know where you're trading at, okay? Especially with that breakout to that new all-time high. We were just 50 cents shy of 3,700, and they rejected it, and now it's coming right back down. So you don't necessarily have to give back all of your profit to the market, okay? You don't got to get greedy. That was a perfect fill right back to the highest point of the day. So there could be strong sellers, you know, trading the all-time highs and selling it back down. So, you know, now it could come all the way back in, and then you got to retest your zones over here, okay? Hopefully I explained that. We're going into 8 a.m. in the next 3-4 minutes. So again, hourly candles can switch. Look at your hourly. They're barcoding basically. Look at the last 3 hours of trading, okay? Right up here. You had a bullish hourly candle at 5. 6 a.m. you had a bearish engulfing candle. 7 a.m. right now, we've got a bullish candle maybe coming back up. Next is 8 a.m. It could come back down, right? You're barcoding, bullish, bearish, bullish. Next one could be bearish. Could build for Colmex and news and continue to break out for a new all-time high. However, they could be holding it down, and the news could cause gold to sell off, right? We have high impact news in the next 30 minutes. We have Colmex market open, okay? So anything can happen, right? Market sentiment can shift real fast. If you're still holding the trade, you have levels, right? So that was a big bearish candle, bearish, 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 bearish. Got a wick, you know, it's still above this green box, coming back up. Could they flip this candle, close it above? Are we going to continue to break out? That's why I only leave 20% for running purposes, to allow it to do what it wants to do. Sometimes I don't leave my full entire trade. That one, I held that one with you guys for quite some time, but on that breakout candle, you know, kind of, it was time to take some money out, right? Got to make up for that drawdown. Got to get some money in the pockets, okay? Thank you, Bart. I appreciate you. Do you guys have any questions on Zoom about... I hopefully I broke it down to you guys. The entry was right there, pretty shitty entry, but I gave you guys, when I saw, okay, this is what I saw, right? It came down. I saw that bullish candle come up, get rejected, come back down. And then right here, starting at 705.7, I saw it come down deep in there. I thought that was, you know, they triggered those buyers in there. And then it came back up and it closed strong. So remember short wick, this candle opened, it came up, it came back down. It opened ignited, right? That's what kind of got me in. It opened ignited, it came up, and then one more time it came back down, it refueled itself, and then that's when I entered on that buy, okay? It was on impulse, and then you see, had I not gone on impulse, I would have watched that bearish candle come down, that bearish candle come down at that white line, come back up, maybe right there would have gave me the strong signal for buying, and then that bullish ignited one could have been my entry, right? And then I would have placed my stop loss below that green zone right there and held this trade with minimal drawdown and in profit. However, that wasn't the situation. Okay, so I'm explaining to you guys, this is like my review. I screwed up on that impulse. But another thing was my stop loss placement. So I placed it as I took the buy. I looked at where my point of control was, that white line, and I just placed it just below that. That wick almost came and got me down there. They almost stopped me out. However, it held. That's why a technical analysis top down is your best friend when you know exactly what you're looking for at these proper locations. So it can teach you where to take profit. It can teach you where to place stop losses. It can teach you where to place pending orders in the market. All of these things can make trading a little bit more easy than just guessing every day. Should I be buying? Should I be selling? Where do I place my stop loss? Things like that. It can really give you the blueprint to successful trading. And then I started to just watch the volume. We got that rejection, nice big bullish ignited open, close in that zone. Pullback, held 50%, continue to make that high. This candle, we couldn't break above that resistance, remember? Then that one finally, after 730, 735, broke. Look at the retest where it came down, and then we cut through our hourly resistance zone with the body closing above. The retest, I flipped the zone back up, and then that's where we got our new all-time high. And that's where I brought that red box from that wick, and that to those bodies. And you still see how that red box is still holding now. So this could technically be like a double top, right? Where it came up one top right there. There's our bigger neckline down in there. We had that nice leg up that we bought right there. But this could represent the next leg pushing down. So it could either push down in here and go back up. It could push and break this, close below. You got to go with that green to red because it could come in there and then go back down red. And then maybe they could take this out later with news. Right now it's holding, but they could definitely take that out with news, and then gold starts selling back down, okay? So those are our zones of interest that we have to watch going into COMEX and US retail news, high impact at 8:30, okay? So right now I still have that 20% running, but you know, it could come all the way back down and stop me out. But I'm okay with that. That's 20%. I still got the bulk of the trade out of there. But it could continue to build off of this and continue to go back up, okay? So that's how you can trade with knowing which location to look for, where to place stop losses, where to possibly take profit out of the market, all of these things, okay? But also, you got to respect the highs of the days, right? You got to respect the high of the day. You got to respect the low of the day. We talked about this with US30 and NASDAQ yesterday too. Okay, so guys, we'll just continue watching gold. Or would you like to do a quick top down on NASDAQ or US30, get it out of the way so we can get one of those done so we're not rushing with US30 or NASDAQ, coming out of the news, because sometimes we rush that analysis. NASDAQ, Patrick? Okay. So guys, if you guys can just monitor this on your own, I'm going to place a hard, at my break even, I'm going to put a hard stop in there. So I'm just placing my 20% that I'm running. I'm just placing a hard stop right there, just in case it comes down and I'm not on the chart. They can stop me out, and they got my 20%, no problem. But if you guys are going to continue watch this, right now you see how it came in there, got a wick. You got to go through the motions, okay? You got to go through every single body. You got to watch it closely, okay? I'm going to do NASDAQ now, and then we'll do US30 later. Let's do NASDAQ, and we'll come back to gold at around 8:15 to get ready for COMEX and then the news. So I'll come back down to this. We'll come back. But now let's get NASDAQ out of the way. Okay, so NASDAQ. It was trading at all-time highs, right? This is how it looks on the 5 minutes. But let's do our top-down analysis, okay? So, wow, look at it, okay? It's trading all the way at all-time highs, okay? So you guys remember this big previous all-time high double top, December 2024, February 2025, double top drop. Stretch into the future, right over here, end of June, we got volume close above, showing us now we can flip that double top supply into a nice demand zone. That would be a really nice area to buy NASDAQ if it ever pulls back down into there. So I don't think it's going to come down today, but I'm going to place an alert in case it does. I want to get in the habit of doing this. If it pulls back all the way down in here, that could be a beautiful wick that comes out of there and ignites all those pending buyers down there waiting. You know, they never bought the all-time high break here. They never got that. They never got that. So they're probably accumulating and pending their orders in there. Now, what we did yesterday was figure out pivot points, okay? So very simple. This leg that broke out, where did it go and where did it kind of just stop? What can you visually see right there? That's a good location. It came in there and it just stopped. Like the blue candles stopped right there. Then I can see the black candles come down. The black candles also did not come all the way down there. They stopped right there. So I'm starting to see pivot points in the market. So it came right back up. We closed above, barcoded 3 and continued to drive. New all-time high. There's a pivot point, right? Where are the bodies located? Right there. Sorry, I don't want to use my red cut line. I selected the wrong line. My yellow daily point of interest, okay? And then from there, it came back down, and it stopped right there. Body, body. Yes, I see a wick, a wick, a wick, a wick. I'll explain what those wicks are in just a moment. Just continue looking at your points of interest. Now, when you see that wick, that wick, that wick, that wick, it obviously came down there for a reason, to grab some liquidity. And then you see that bullish body right there. That's from that point of interest, from that bearish candle, it stopped right there at 50% of that bullish candle. And then it came right back up, bullish ignited. So if you kind of just based analysis off of that yellow line and you consolidate those bodies of volume, bring it into the future, now I can see that it's a bullish demand zone. It came in there, back up, came in there, back up, came in there, back up. Again, stretch into the future. I can see on this day, September 2nd, new month, that was that pullback as September that came out of there, and look at the results now. Consider this like to be, these are daily candles, but look at them as like they were 5-minute candles. A 5-minute candle came deep down in there, grabbed all that liquidity, came back up, closed above, and then the 5-minute candles are starting to make higher highs and higher lows, higher highs and higher lows, and they haven't pulled back yet. Unfortunately, these are daily candles, and they're strong as crazy. They're very strong right now, taking us to all-time highs. Okay, but that zone now, once you figure out a zone, there it is. Stretch it into the future. It's above this zone, so you know it's got to test this zone before it can come all the way deeper down into this one. Okay, so what happens if it comes in here, goes back up, lower high, breaks, then it does this. Then we're trading into that zone. Very simple. There's your A, B, C, D, E pattern, your Elliott wave pattern. Okay. Now, what do we got going on above here? Okay, so we are now trading at an all-time high. I know that today's wick has to be an all-time high right up there. So let's just draw our orange line representing all-time high. I know it's our purple high of the day, so you could either go purple or orange, whatever you like up there. Just understand that that is all-time high. 24,392, just below that 400. Okay, so my next one, if it can price discovery, if we continue driving, let's go to 500, 24,500. Nice psychological level. Yellow line, daily point of interest, right? Now, look at yesterday's volume. Okay, can we analyze yesterday's volume? Is there anything to talk about? Absolutely, there is. It opened right there. There's my previous day's close, open. It pulled back. Are we above 50% on Friday? Yes, we are. So it continued to break above, take out the previous all-time high, Friday's high, continued to drive yesterday, highest point, all-time high, and then we closed right there. So I can figure out my close and my open today, clean transition. Can I figure out 50% of yesterday's volume? Let's get in the habit of doing this. I can guess. I would guess that that's 50%, but let's not guess. Grab your Fibonacci tool, opening balance, closing balance. Very easy, okay? And then see where I guessed? I was pretty close, but I want to be exact. And there's my bullish point of control coming out of yesterday. Same shit we did on gold. Same we're doing on NASDAQ. Nothing changes, just the security changes. Okay, so there's my bullish point of control coming from yesterday. Today, have we came in here to retest this? No, we haven't. Okay, so that block is still pending in the market. Maybe NASDAQ will pull back down into here, maybe take it back up. But so far, we haven't came in here. Okay, so now let's just figure out. We opened. When we opened, NASDAQ was initially bearish. There's the wick, shadow, tail. It's showing us the footprint, how low it came down to. There's my purple line, okay? So it's still holding. Right away, it came back to the opening balance, and the buyers took out yesterday's high. So I know I'm placing a yellow line there, but it is important because that was yesterday's previous all-time high, fresh high. So if we come all the way back down, selling, we might revisit this location, 24,300, and buyers are holding it because they're protecting the opening balance and continue to push it up, okay? If we lose this, we don't have too much bullish volume, and then we can lose it. Look how short the wick is. Then this could turn into a bearish shooting star coming all the way back down to transact in that bullish point of control. So if we lose all our bullish volume today during this news or FOMC, right? I think FOMC is going to be the buy the rumor, sell the news event. They're continuing to drive it to all-time highs. We've already baked in a 0.25% decrease, maybe 0.5% tomorrow. It's not like it's going to be a surprise to the market. So it could be normal. Normally we see when they decrease rates, markets rally and continue go up bullish. We're already going bullish with already knowing the news, right? So they could just be driving it, grabbing liquidity up there, and then tomorrow they'll dump the markets. That's just my bias going into tomorrow, okay? But that's a bias. That's not 100% guaranteed. I got to watch how everything is trading into tomorrow, okay? So I can see we came up bullish. We got to our new all-time high. That is also our daily high up there. So it could either be a purple line, but I'll keep it orange. And I can see that we're getting rejected so far. But we still have this bullish volume. Now what I can do is we got to start to dissect. We got to go from a daily to 4 hour. I got to go a little faster because I got 5 more minutes, guys. Then we got to get in 8:15 and watch gold. Look at the 4 hour candles, okay? These things are just making highs, double bottom in there, come back up, came in there. There's a bigger double bottom, one bottom, second bottom, come back up, break. Look at there, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Look at it, continue go. Now we've got a 4 hour engulfing candle coming down, okay? So it's not going to close for the next hour and 50 minutes, but right now it's engulfing, okay? So right now I have a 4 hour zone of supply. There's the new all-time high. There's the bodies of reference right there. So this is my red box going across to let me know if we're continuing to come up here. Now we're trading in a 4 hour supply zone, okay? Off of these 4 hour candles, which is a good candle. Remember we based everything off of the gold candle during the European volume? It was this one. 2 a.m. to 6 a.m. So I can see 2 a.m. opened. That's pre-London and London. It came down, made a low, came back up, came all-time high, got rejected. And this new 4 hour candle that opened from 6 a.m. pre-New York, closing at 10, is already engulfing most of Europe's bullish volume, okay? This has an hour and 48 minutes to go, so I don't know where it will close. But let's identify 50% of this bullish candle right there, draw a white line, right? So if we take out European low, That's where it could drop, new lower low, 24,322, and we see if it will hold in there. If this volume looks like it's coming down heavy, they'll probably break this and then come back down to the opening price. Testing out this yellow line, okay? So this is very bearish coming down right now. They've already established a lower high and they're pushing it down. Now on the hourly, looking at NASDAQ, okay, very bullish move coming out of here, Monday, Wall Street, 9 a.m. We continued with all of these higher highs. Right there, 4 a.m. was that bullish move to take us to all-time high. Now look at the hourly candles. They're coming down, lower low, lower high, lower low, lower high, lower low. So they're coming down, but let's see what type of reaction maybe we get at this white line. So I'm going to place an alert at this white line to let me know if the volume comes down there. It could come back down here, maybe bounce off this and start its next leg up. But then when it's coming up, it could come into a 4-hour double top all-time high supply. Maybe they orchestrate this, they engineer this going into FOMC, and that could be like the double top, and then the market sells off tomorrow, right? So we've got one leg coming up, we've got the leg coming down. Now we just have to figure out where like the neckline is. What I look at is if I use this white line as point of interest, I can see that we've got bodies of volume right now. So when I draw like a green zone, I'm drawing it like right there to show me how see what I just did there? I went to that white line that I got from the 4-hour hourly, and then I just moved it up to those bodies and that wick. So I see it came in here, back up. I see it just came in there right now, and it's coming back up. So will it continue to trade bearish, close below here? We'll flip that green zone red. We're going to sell off on NASDAQ, or is it going to continue to hold this? And then we'll have our next leg coming up with news or Wall Street, okay? So I'm drawing that into the future. That's my hourly now. And then when I look at the 5 minutes, this is how the 5-minute candles are trading. They were making that high, pulled back in here, higher high, pulled back, higher low. That's what got us to the all-time high, daily high, was just right before 5 a.m. Eastern. And then we started coming down. We came back up, lower high. I can see where the 5 minutes now are building a little bit of structure and continue to push down. Now we'll see if these 5-minute candles can come back up. But right now it's lower lows, lower highs, and a new lower low. So we got to continue to watch and see how this thing builds. Is there some structure on the 5 minutes, like points of interest? See that pivot point right there where that 1, 2, 3, 4 bearish candles came down and they stopped right there, then a big bullish one printed. Right there is where I kind of draw a 5-minute point of interest right there. Pivot, looking across. That big bearish candle that came down at 7:15, broke it, came back up, closed above. Now I got volume on the 5 minutes closing below. So that red line is now resistance. See how we're coming right back up to it? So if you're buying, you're looking to either, again, close above that red line, retest it, and then you can travel right back up to there. To 50% of that bearish candle, there's a wick, and a wick. So they're holding it down right there. So like for scalping, when I'm looking at my scalp zones, where I'm scalping to or what I'm looking for is right there, right? There's that 50% of that bearish candle. It came up, pushed back down, came up, pushed back down, came up, pushed back down. Below 50% of that bearish candle, that's what started that leg. So we could be coming back up, but every time we're coming back up, we're going against the trend, okay? So you got to understand now, from this highest point, you can draw a trend line. Okay, from the all-time high, from today's daily high, I connect it from where? From point A to B. A to B. I'm not going down like this, A to B. And then I extend it into the future. My trend line, same with I do everything. Okay, A to B. So there's our trend line. It could come back up bullish and get rejected right there and go back down. If it goes back down, I look for it to hold this and then break through there. And maybe we break through and then come back and retest this, and then we're driving back up to there. And then that's your A, B, C, D, E pattern, right? So, but right now, sellers are pushing it down, but we got to rely on our supporting zone. So we'll come back, we'll revisit NASDAQ in just a little bit because it's 8:16. We got to go back to gold. This is our daily SSD daily buyer indicator of NASDAQ opening price, small pullback. You can see right there when we opened up. The futures market dropped us down, and it was really bullish coming out of the futures, really bullish going from Europe, like London, and then we just started having this push down where it could go back up, but we're still trending down right now, okay? We'll revisit NASDAQ in just a little bit. Let's go to gold because we got COMEX market opening up very, very soon. and we have that 8:30 high impact news. Okay, so we'll leave NASDAQ right over here to the right. I'll do US 30 just before 9 a.m. We'll do US 30, and here's gold. Okay. Yeah, my BE, I put a hard stop on my BE. So my BE over here on that 20% got hit. Okay, so I'm just going to remove everything. We're going to start fresh. See what happens, guys. It can go all the way up. And again, if you don't do anything, look how it can come all the way back down. Okay, so that's why I told you guys I'm taking out 80% up there. You know, I don't always hold trades forever, guys, because I know that markets will always retrace back down. Okay, and it's a sad thing to give away all of your profit. So have some sort of rule. My rule of trading is 80-20. I take out 80% and I leave 20% running with a break even. I hope and pray that my runner can continue going sky high if I'm in a buy, or an elevator going down if I'm in a sell. But the bulk of my trade I take out at specific points of interest. Okay. Now let's just continue cleaning up our charts. Did we close below this green zone? Yes. So now that green zone is red above us. We know our all-time high supply. We know our daily high is still a red zone above us. Okay. We had right there where they impulsively broke it out to basically 3,700, 36.99 and 50 cents. And then they rejected it back down. That's what started that leg down. You know, sometimes it's very easy to see these things. Even if you're in a buy, you can close your trade up there and you could even sell this leg coming down. That's normally how I scalp the markets, is I'll look for, I might scalp this move coming down, close my position where the big buyers are. That's where I want to be closing my position. As a seller, you're selling into the buyers. In order to close your position, you gotta buy your position back where the buyers are. So, you know, when you're closing your sell, you could be literally buying the next leg back up. And when you're closing your buy where the sellers are, you could literally sell it back down. You could have scalped when volume is moving, cooperating beautifully like this, where you can literally read it going up, coming down, going up, going down, going back up, like how yesterday's volume was. I call it a scalper's paradise, because you could literally just go with the waves of the market. I hate when it's this stuff, where it's like trading sideways and kind of barcoding like this. I hate this stuff, where it's doing this. It's not really trending anywhere. It's just going down, back up, down, back up. Like, this is beautiful volume. Like when you start to get it going out, coming back down. Then you got a nice big bullish move, bearish move coming down, nice new bullish move coming back up, bearish move going down, nice bullish move coming up, bearish move going down, maybe the next bullish move going back up. It's beautiful to watch and beautiful to trade. That's the type of volume you want to target on a daily basis. But part of our job as traders is to determine what is trending volume, what is good volume to trade, and then what is volume we want to stay away from. Anytime we see sideways, barcoding, whipsaw, big wicks above, big wicks below, avoid that trading at all costs. If you're not in a trade, do not engage in that. That's where you got to be patient. You got to be disciplined. Wait for that good volume. You will become an expert at this, and you will determine what is good trading volume, and you'll also recognize what is shitty volume to trade. You will understand. And then when you observe it and you see that today is not a good time to be trading, learn how to stay out of the markets. You'll save yourself headaches down the road. You'll save yourself stress. You'll save yourself frustration. Don't engage in that, okay? Always understand the markets are open Monday to Friday, every single day. If today is not a good trading day, tomorrow will be a better trading day. I wish someone taught me that from when I learned how to trade from day one. I never learned that stuff. So I was trading everything. I didn't know what was good volume. I didn't know what was shitty volume. I had no idea, okay? So hopefully you guys can learn. Now we got COMEX market open, okay? So this is the commodities exchange. It just opened up 90 seconds ago. So we're now coming back down. Is this leg coming back down to test back? Remember right here where it was that strong buyers came in right here. So we're still upholding our trend line, but if it does break, okay, let's just go with the waves. Wave 1 came down here, bearish. Wave 2 came back up, bullish. took out the new daily high, new all-time high, volume closed right at that red zone. Now we're pushing back down with the leg 3, right? So is it going to come down, make a higher low, or come down double bottom right there again? Or is it going to, sellers are going to break it and then cause this bearish leg to continue to push down? Okay, so that's what we really got to watch for, okay? I'm not in that trade right now. I'm out of all of my trades. Now I'm just watching, observing, seeing what will happen with COMEX, and more importantly, our 8:30 high impact news. We do have 3-4 Canadian folders coming through, but more importantly, the US core retail and retail sales all coming up in 7 minutes. If you joined us early on the call, we broke down the retail sales with our latest blog over here. So if you go to more and blog, click on retail sales, you can learn a little bit exactly of our folder that we're going into in the next 7 minutes, okay? So let's watch this. Is anyone in a current trade right now on gold going into this news? Are you looking to buy or looking to sell? You guys are in buys? Okay, let me ask you guys, let's just kind of dissect the news for a minute. What do you guys think of the retail sales? Month over month. So the previous month of August, if we're talking about, let's talk about all retail sales, not core, just the overall retail sales. So do you think that retail sales is going to be above this forecast of 0.2? Like, what do you think in the month of August? Do you think, just looking back, when you went to the mall, when you went to the grocery store, when you went to Home Depot, did you see a lot of consumers spending money? Did you see that the lineups were not busy at all? Like, this is how you got to kind of think about this. You got to think last month. You know, you got to develop a little bit of a bias, right? We live in all different parts of the world. I live in Canada. You might live in the United States. Some of you guys live in Europe. Some of you guys are in Africa. Some of you guys are in Asia. We're all over the world right now. So what do you guys but we're now talking about the US, okay? So I need my US traders to help us answer this. I don't live in the US. I'll be there next week in Chicago for the Bears game in Dallas. I'll be spending some money down there on deep dish pizza. So I'll be contributing to your restaurants in Chicago, Illinois. But what do you guys think? Back to school shopping. Yes, Tony. Now you're thinking. Okay, so month of August going into September, I went back to school shopping with the kids. I was contributing to buying all kinds of school supplies, right? Walmart was packed and you couldn't even find any school supplies in Walmart because everything was sold out. So back to school shopping, that could contribute to retail sales. Like, now you're starting to think. Perfect. That's how we got to think about these folders, okay? We always got to think of what like when we go into holiday season, you know, we're going to go into November. People start their Christmas shopping, you know, their holiday shopping, December. So when we go into January and we're looking at retail sales, you got to think about holiday season. You got to think everyone going crazy for Christmas and holidays spending and buying up during the holidays and going to Costco and getting a lot of food because you got families coming over, visiting, and all of these things. So that's how you got to think. You got to think just like a normal retail shopper, right? But we're traders. We're trading the markets on these news. Okay, so look, we're now coming down bearish, okay, 825. We have 4 more minutes till they release the news. So remember where we got good solid support right there? Now let's watch. Is the market going to break that and come a little lower? If they do, then we're losing our support down here. Then it looks like it's a bearish leg coming down. There's our our double top, and then coming back down. It could break this. That could cause a lower low in the market. So what happens if it closes below there? Then we flip that big block coming from Europe where we were kind of buying out of. We make it bearish, and then now the market, gold is dropping all the way back down in here, okay? So that could very well play out. That could happen. But right now, I see that bearish candle came in. So far, green zone, higher low, coming back up. It's still respecting our overall trend line. Yes, it did violate it. Yes, it did break it, but that was an impulse. I don't see any volume confirming a closure down there. Now the buyers are bringing it right back up. So this could start a bullish leg coming back up, okay? So we got 3 more minutes to go into this close of COMEX, basically close, not the close of COMEX, but the close of this candle that kind of first 10 minutes opened up COMEX. More importantly, this big high impact news, okay? So have some rules, guys. This is high impact for a reason. 2 red folders here, high impact. There's going to be volatility. There's going to be big swings in trading the US dollar and gold and NASDAQ and US30. So now you have to consider, are you going to trade impulse right as soon as they drop the news? Are you waiting 5 minutes till 8:35? Let the news come into the markets, let the market digest it, move up and down, gather liquidity, and we trade after. That's a plan. Or you're waiting for your first 15-minute candle to close, whatever is your cup of tea, whatever is your time frame. I'll be going 5-minute by 5-minute analysis. Another thing is, how much are you willing to risk on this trade? We've hopefully made a little bit of profit on the gold trade. So do we want to risk all of our gold profit on our next trade? Or do we want to maybe minimize a little bit because now we're trading more high impact news? All of these things to consider prior to taking a trade. You always have to have a trade plan for your entire day. Also, scalpers have to have a trade plan for every time we take our next trade. It's not just playing bingo here. We're not just buying and selling and not looking at how much we made, how much we've lost, just continue hitting the buy and sell button. You got to be also a trade manager. You got to be your own account manager. You're basically your own financial advisor. When you make money or lose money, how much do you allocate on your next trade? This will really take you to the next level when you're trading. You're not guessing anymore. Hopefully you guys understand that, okay? Some of you guys maybe, I don't know, we're trading London while I was sleeping, maybe trade a little bit of gold. Maybe you guys are at your daily goal right now. Who knows? But you want to now risk your entire daily goal on just trading news. Maybe a certain allocation of that. Maybe some of you guys are in drawdown. Again, I'm not going to say that everyone is in profit here. Maybe someone's in drawdown or you're close to your daily goal, your daily drawdown limit. Are you going to go high risk right now in news to try and make that up, or are you going to go slowly? These are other things to consider, okay? Everyone is different, but we all got to manage our own risk. We're not here to gamble, okay? So now we see sellers have a big bearish candle pushing this thing down. Again, will it take out that low? Remember, this is a really important point of control, okay? So we've broke down the trend now with volume below it, 20 seconds to go into close. So it's kind of hinting that the market wants to maybe rally to the downside. However, news could negate that quickly, okay? So the news is going to drop very, very soon, guys. Get ready. You'll see some breaking news over here on Financial Juice to the left of my chart when they release the numbers. Forex Factory is kind of slow at releasing it. There's the drop, okay? So it's coming right through there. It hasn't closed below this zone yet, so now it's transacting below it. We'll wait for official close. Okay, so US dollar is moving up. Gold is dropping. I like to look at the numbers too. Core retail sales up. Wow. Okay, so they're up 0.6 from the previous month, and they're above 0.4. So retail sales month over month, great. Core retail sales up. Okay, so that's good. That's good for the US dollar. It's showing consumers are spending, right? So maybe what's going to go on with gold is we might continue to sell off on gold. Okay, so we got to watch closing prices here. Could be back to school, just something simple like that. They'll break this down once you get the report from here. They'll break down the individual sales. Like over here where I had, sorry guys, I know I'm doing this real quick, but where they break down this, you'll see how much is allocated to restaurants, personal health, clothing stores, grocery stores, department stores, all that shit. Okay, you'll get the breakdown on there, and it will show how much allocated to certain those different categories for retail spending. Okay, so we cut right through here. It dropped down. Buyers got activated down there, so it's coming right back up. Look at the volume. Notice the volume is again right above this white line. So let's see if it continues to build, come back up. Will it close, accumulate in here? Again, I'm waiting for this 3 more minutes to close to justify where this thing is going. I just want to see the Canadian news as well. Canadian CPI down, median and trimmed, common and core CPI pending. Okay, but very, very good results coming out of the retail sales in the U.S. Okay, so they did kind of break this move down. Okay, remember that? That's where that big leg was. Drop it back down. So they did pierce through there. They did create that lower low, but did they come down, grab liquidity, and then they're going to turn it back up? Okay, I'm going to watch where the candle bar closes, or just maybe continue selling down with this momentum. Okay. We have a close in 2 more minutes. Okay, so strong candles still coming out of here. Where will be the official closure? I know that 50% of that bearish candle is right there, like right at that green zone right there. Okay, so now it's coming back down. Again, it's going to be ultimately where it closes. 90 more seconds to go. Is it going to close below this entire green zone? If that's the case, I got to go through my motions. Green to red. This could start to illustrate that it could be turning into a opportunity where sellers are offering more than there is buyers and continue to maybe push this thing down. Okay, so this is kind of the neckline too on the M pattern. So it came up, back down. Right here's the neckline, that 4-hour point of control, and came back up, and we could be closing below it with a bar. Okay, it's going to come down. Look at where they're fighting right near that white line. Right, they got it right above it in the last 1 minute. Okay, so buyers are really hanging in here. How did that affect NASDAQ? NASDAQ, no real significance on it so far. Gold was impacted a little bit more. Okay, so here's the close in the next 20 seconds. This is where you got to really pay attention. Okay, so it was initially bearish on the news. Broke through this big pending block, got picked right back up by the buyers, and they're asking to trade again just above the opening position near the highest point. So it could come all the way back up to retest 50% of that candle. Okay, here's the close. Okay, so it came up very positive, but it could continue to push down in here, or we found an area of accumulation right here now. This is where kind of I'm boxing in this zone. So definitely buyers could continue to maybe close it above here, retest this, and come a little further up. But that news was very strong for the US dollar. So gold, traditionally, we should see it correlated and see some selling pressure. But right now we're still in that green 4-hour demand zone. So there is sellers in here, but there's majority of more buyers. So maybe the orders got to get filled. Yes, it could continue to go back up here. But this could be another one of those impulse breaks that comes up and gets a wick and goes down. So I already got caught on one impulse trade. So I kind of don't want to get involved in another impulse. I kind of learned my lesson the first time. Thankfully, the market returned and got me into profit. But I don't want to make that mistake again. So now I got to officially wait for a body to close. If the buyers are strong, they will prove to me that they can close it above there. However, if the sellers are strong, they will prove to me that they can contain these buyers and bring the price back down, trade it into here. So I'm going to wait it out, guys. Maybe another close of this bar. Yes, we can enter on an impulse, but I just went over the mistake I made on an earlier impulse, and I don't want to get caught again. Then I haven't learned any lesson, right? Then what's the point of me coming on here? If that's what if I'm not learning from my own mistakes, right? So, but if you do take an impulse, there's always, you can use a feeler trade to get your feet wet. Okay, so there was an impulse. They've rejected it down. Where will the bar close? And then if the buyers prove to me that they can close above here, I'll figure out how high it goes, where it closes. I could maybe buy a pullback if that's the case. Jobless expansion fuels bull case as Fed rate cut looms. So we just had the US, okay, retail sales up a better than expected 0.6 in August from July, even as tariffs start to impact jobs and hike prices. So there is an article. Maybe if we do have time, we can open up that article and read it. But we can also watch the closing prices over here. Thank you guys for everyone on YouTube. We appreciate you guys this morning. 800 viewers. If you guys can kindly leave us a like, subscribe to the channel if you haven't already. We do appreciate you guys. We're getting all-time highs on our trend line for our subs. Let's see if we can hit 500 today. There's a big pin bar candle, okay? So they've really rejected that. So I was saying, guys, we got to be careful on those impulse moves. Now it's a big bearish candle coming down. Let's see where it's going to close. Will it close below our white 4-hour point of control and continue to selling down? That's what I mean, guys. I did not want to get caught on that impulse trade again. Told you guys, I learned my lesson the first time. And so maybe they sucked in those buyers and now they're redistributing. So let's see, will these sellers be able to close it in the lower half of our 4-hour block or completely below it and create a new low? And then therefore we'll make this green box red, okay? So it looks like gold wants to sell off of that news. Okay, so there's where they trap those buyers. Now they're moving the market away from them. Where will this bar close in the next 1 minute? So you see how the trend line, our yellow trend line, was holding support, 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 support. When the body closed below, you can see how the trend line turns to resistance as well. Okay, so it's a big push down with the sellers. Let's see where it will close. That could have been a possible impulse trade if you're scalping, like the way how it got rejected and coming down right there where it broke. Sometimes that's what I look for when I'm impulse trading on the 1 minutes, just to take it from there and just to fill the wick and grab 10, 20 pips and get out of that trade. Okay, but that's not what I'm doing here. Here I'm waiting for the official close. So they did create a new low. So we got that move down, came back up, double top at the daily high, all-time high, pushed it down with the news, new lower low. Okay, so let's watch where it's going to close now. Okay, so there's the close. That's going to represent about 50% right there. Notice the size of the wick as well. Okay, so it's an ignited candle opening up. Will it break? Will it catch a wick and come right back up for an official retest? But remember, it's opened ignited. It's opened ignited bearish. So it's, you know, like if you missed it, you miss it. Okay, you got to allow it to come back up maybe, or if it comes back up, it might refuel back down. Okay, so sometimes shit, like this is what I hate. Sometimes I miss it and then I don't want to sell the lowest point. So unfortunately I missed it. I got to either wait for it to pull back up, either to retest back up here, you know, to come back in and then go back down. That's where you got to either wait for it, or you got to watch if it catches a wick and it comes back up to that opening position and it still holds that bearish ignited head, it could continue to drop down. So I feel like I missed out already to hit that sell button. So now I don't want to kind of just get in by selling the lowest point of the candle. That's that FOMO, fear of missing out. I don't have any fear of missing out. I can wait for it to pull back. You know, what I can do is I could do analysis. I could look at point of control of that bearish candle right there. So there's kind of that 50% box right there, what I'm looking at, if it can come return back in here. It hasn't officially closed below this green zone as of yet as well. So it is an ignited candle pushing down. Maybe this will be our first bearish bar that can close below. Then this big green zone will be making it red. So then it will give us a better opportunity to maybe sell a pullback in there if it comes down to us. Yeah, guys, I admit I missed out. I should have sold it right there. but I didn't. So we can't get in the habit of just getting in a sell at the lowest point and just FOMO, fear of missing out. This is where now we're going to learn how to look for a proper retest on a pullback and sell at a discount level, okay? Now look at when it's coming right back up. So for, again, if you did anything when it was coming down there, again, I always say, did you do anything? Did you, if like that was a 20 pip drop, if it came down there, did you go to a break even? Did you scale out? If you didn't, what if the candle starts flipping up and turning back up here, and we could be possibly waiting to sell in there, okay? So I don't play this would have, should have, could have game. I make decisions on the fly. There, I felt like I was too late, and I didn't want to make that mistake of going in. So now we still haven't even retested this. We just opened Ignited, and they've been dropping it. Excellent, James. 1.1 today on your new challenge. Time for a break before I... No, yep, time for a break. That's it. At 1%, perfect. Yep. Good job, man. Okay, so you see that's a hanging man candle. It's still holding its ignited head, pushing down. Buyers are bringing it back up. It hasn't flipped yet. There's where it's now. Dragonfly, doji candle, where it comes kind of all the way back up to the opening price. We'll see, will it flip back up blue, and will we get our retest in there? Still holding that bearish head. Where will it close? 1:30. Right, will it close below this big green? Remember, this green zone is coming from Europe, from our 4-hour candle. Am I looking for a buy? No, I'm looking for a pullback sell, actually. Okay, so now the candle flipped bullish. So, you know, it pushed down 20, 25 pips, but now it's could come right back up. And then if it doesn't close below this green zone, we're still trading in that green zone. We still got to give respect to the buyers. If they bring it back in there, it's still a green zone, right? Okay, so now it turned into a hammer candle. Will it drive a little further up? Trade into that point of control, that previous bearish candle. Now it's coming right back up, okay? With 30 seconds to go. If it closes above here, we could invert this, yeah, and then it could be maybe we could potentially look for a buy, right? It all depends on where the volume closes, how it closes, where it closes. So it's came up there, it's retested it, they pushed it down. Here's our close. Get ready. Okay, so it closed with a little bit of bullish volume. It got retested there. We open with this doji candle. Will it come back down and break down to fill those wicks? Or are we going to get multiple retests? This could be that 3-bar impulse break again, right? Okay, so is it catching a wick? Is it going to go back up, or is it just refueling to continue to push down? Okay, this is where the market teases you, saying, take a trade, take a trade, take a trade. You know, it's tough, okay? Because if you've been bit from an impulse, you're kind of biting your tongue, getting, you know, like that teased us to take that, right? It was teasing, but now it went back up. Now maybe it will come down with stronger volume. Now it might be refueling itself again to continue push down. You might want to sell with the second leg coming down with the momentum of the candle if it's still holding its bearish head. However, if it flips back up, I see a higher low blue candle could continue to drive into the red zone, okay? So you see again how I held off by taking that sell on that impulse. I was ready. I had my finger on the trigger, but again, I just held off from the earlier lesson that I learned today. So you can see like we don't have selling volume below that green zone as of yet. Now it traded right into the red zone and we're consolidating. Are we creating a bear flag to continue to drop down, or are buyers accumulating to bring it a little bit higher back up into here? Samuel, you have a buy limit at 36.86, not triggered. Oh man, it sucks when that happens. Almost came in there. Okay, so we traded in that red zone. They rejected it back down. Okay, when we're talking about a bear flag where we could be consolidating in the lower half of this, down in here, half the candle is exhausted now. 2.5 more minutes to go. So we've basically retested the 835 candle. Sellers are still there, rejecting the move back down. Okay, so it's a spin top now, showing indecision. Opening price, remember, was bearish, bearish, bearish. Came down there, picked up the buyers, went back up, back up, back up. Came in that red point of control, and sellers are pushing it right back down to the opening balance. This is where we got that spin top candle. You want to take now the impulse move with 2 more minutes to go, or do you want to just wait for the candle bar to close? Okay, I know it's tempting, but I'm going to wait for it to close. Buyers are showing me they're here. Sellers are showing me here. We're still kind of in this consolidated zone right now. It's still in an accumulation phase. Both sides are still accumulating. I don't see buyers closing it above here, and I don't see sellers closing it below here. So they're both fighting it out, right? This is a strong green zone coming from Europe, that 4-hour point of control, and we still have short-term buyers that are still accumulating, and we have sellers with the news, but still building right back up. So again, I'm not in a trade. I'm watching. Some of you guys I see are in buy limits, got triggered. Some of you guys are in, some of you guys might be selling from the news, okay? I understand how markets work. They work both ways. Some of you guys will be buying, some of you guys will be selling. Some of you guys are selling while others are buying. That's how the markets work, okay? But just please use proper risk management while you're trading and making your analysis. Now it shows me sellers are coming back down. It's this spin top candle, okay? It hasn't decided where it wants to close, but I'm kind of just going with the flow of the market. The market is showing me that it wants to push to the downside. Okay, now do you want to take an impulse with 44 seconds to go? Because sometimes it gives that last momentum of that push coming down. Just tell yourself, you know, if it's 40 seconds, 30 seconds, 20 seconds, you can wait for the close. If you've already waited 4 minutes, what's another 20 seconds? What's another 30 seconds? Wait for it officially to close. Okay, and here's the close in 10 seconds. So still showing me some indecision. That's what a spin top is. Who will close out with the volume in the last few seconds? You will see. Okay, so it closed with some bullish volume. So we're still inside here. The buyers have not closed it above this zone to invert that point of control. Okay, so maybe they will get pushed down one more time coming down there, but it's showing good strength. It's showing me good, strong strength so far down in here. If you guys are in your buys, it's still showing good, solid strength down here. Sellers could not close it below there. Okay, but now it came right at the top of that red zone. They've rejected it down. Now this is a different type of candle because it's already transacted inside that entire zone. So if they reject this move, it could turn into a shooting star and then continue to push down. So this is not like taking an impulse candle. This is taken off of the reaction of that zone. I'm going to go into a sell. How it reattempted up to the top of the zone. So I'm going to see now if it can continue to come down, fill these wicks, and get a bearish candle closing below here. So I'm going to place my stop loss now above that previous wick right there. Maybe I'll give it more room to breathe right up above that wick. Okay, so where that point of interest is, up there. See that point of interest? Normally I'll have my stop above that wick, but I want to give it more room to breathe because we're trading in this 4-hour bullish point of control. So it's not easy to break this thing down. So I got to give it a little more room to breathe in case it wants to trade up here. More offers are here,
or here. But I'm gonna sell off of that retest candle that came right through that zone, got rejected, and as it turned down into that shooting star, that's where I entered, okay? So I base it off of the entry of that red zone right there, okay? So now it's coming back up, so I gotta now start to rely on the offers above me, okay? And closing pricing. So I'm in a sell. And I'd like to see if it can push down, close bearish with a bar down here at some point, maybe to come back up and retest this. But when it closes below there, I've already converted the big green zone to a red zone. And then maybe I could get the bigger sellers coming in the market, pushing it back down to this yellow daily point of interest, 3685, maybe breaking it down just a little further to that 200 EMA down in there. And we're going into 9 a.m. in the next 7-8 minutes as well. So we're going to get a new hourly candle. Let's see, are we like kind of barcoding on these 1 hour candles? Let's see here what we got going on. Okay, so remember here, bullish 4 a.m., bullish 5 a.m. 6 a.m. we came down bearish. 7 a.m. we came back up bullish. This candle now 8 a.m., which is going to close the next 6-7 minutes. It would be, I'm going to sell. So if this hourly bearish candle has an opportunity to close below that green zone, we could change the zone bearish, and maybe at 9 a.m. we could follow with that momentum to continue to break down sell side. So we have a really nice hourly candle coming down right now at the bottom of the green zone. So it's going to really determine on who is going to close it below here. So this is what we got to watch for on the close of these lower time frames, is who will win the war of this green zone right here, the buyers or the sellers. It's going to be very, very interesting here. Right here, guys, closing below 3,688. If the sellers can close it below there, we might take that momentum into the next hour to continue to drop down. However, if the buyers are holding this, it could turn up bullish the next hour and come a little higher up here. And then myself in a sell, I go and draw it down. Okay, so here's the last 30 seconds. And we have 5 more minute candle for the 8:55 to 9 a.m. Okay, so let's see what happens here. Let's see if we can get a bar to close below. And we've got 10 seconds to go into the close. So, we got a wick. Let's see if we can get some bearish volume closing below there. If sellers can bid down in here. I can't change the zone until it's officially closed below. So it's closed still inside that green zone. So it could build again with buyers. Okay, we're still in this bear flag. We did get rejected right there, but it's coming up bullish. Okay, but got rejected, and now it's a shooting star candle. So let's see if it can start to take out a few of these low wicks, travel down in here, more importantly, close below here, okay? So you guys are starting to witness live like the power of these higher time frame control zones, right? This is still bullish control. You can see sellers impulsively broke it below there. They have not confirmed with a statement candle closing the volume, and buyers are just keep buying it back up. So, while sellers are selling, buyers are buying. That's how markets work. But I'm just going with the flow of the market and to see if we can, maybe swap this zone and turn it bearish for the next hour to come back down, maybe for gold to retest 3685. And remember, momentum changes every hour. So if they're holding it here, and they don't close it below there, buyers could step in at the new hour and just bring this thing right back up. So that's why it's going to be crucial as to where this candle closes. We're getting some redistribution to the downside, but remember, this candle has 3 more minutes to go. That's a long time. So anything can happen. Remember, this was a big bearish candle that came all the way down here, and then look at when it finally closed, where it closed right back up there. Okay, so that's a nice candle coming down, but you know, I don't get too excited on the impulsive move. I get more excited where it closes. So again, I can't stress enough how important it is to close with bear volume below there. Those buyers are still there accumulating this. So this could also, for you buyers, could be representing a double bottom as well, okay? So it comes down right there. There's your neckline, the red box. It came back down, and now buyers are buying it right back up. So that could suggest a double bottom, right? And then just got to come up here, close above. We flip that red to green, and then you start squeezing me. See, I start going into drawdown, and then I get squeezed out of there, and buyers win, right? But I'm on the sell side. I'm hoping that sellers can close it back below here. We're in a bear flag. We're continuing lower lows, lower highs. You know, the news supported the US dollar. So I'm seeing if gold can sell down just a little bit further down to this yellow line. But it's going to come down to the close. See, it's a battle of the buyers and sellers still inside here. Excuse me, guys. I'm losing my voice. Okay, so buyers are coming in strong with the last 90 seconds. So they could be taking that momentum into the next hour, right? This could be building the wick on the hourly candle right now. Okay, so we got 60 more seconds to go into the close. And that's your 9 EMA right there. So I know some of you guys use your 9 EMA. That's that green line just above us. So we still have the volume below the 9 EMA, suggesting short-term bearish. Our 200 EMA is down here below our daily point of interest. That's why I have a target, like for either a TP or to reduce my risk if it gets down there. So sellers are still in this red zone here, this minor red zone. It's just based off of this 835 bearish candle. So it's still there, rejection, rejection, rejection. Again, it's going to come down to closing volume in this next 15 seconds. Again, if it closes inside the green zone, it's still a green zone. Hourly candle could start to come back up, okay? So here's the close, 10 seconds. Let's watch closely where this bar closes. Coming back down to the opening price of this candle, closed. Okay, so closed, still in the green zone. Open bearish, come down, quick wick, going back up. So this is the volatility of the new hour. We are again pushing. It wants to push down, but you know, I've seen multiple wicks. This one, 1, 2, 3, 4, 5. This could be another 6th wick that wants to come down, but then goes right back up. So it's gonna determine who closes this. You know, if the sellers can close it below here, could continue to move down, right? That's what I'm looking for. I'm looking for a bearish bar to close below here so that I convert this big green zone red and kind of flip all of European volume into offers and kind of illustrate that it's a sell side block in the market on the higher time frames. For us small time scalpers, it could benefit us just to come down through here. But again, you know, it's coming down nicely, but we've seen that multiple candles. Where will it close? That's going to be the critical determining factor here. So that was a nice bearish candle for the first 1 minute coming down. There's still 4 minutes left on the candle, which is a long time. Okay, so it is pushing down, just down to there's about 18 pips. There's about 20, right? So if we can fill that wick right there, that would be approximately 25 pips to fill that previous wick. We gotta watch for tweezer bottom lows We got to watch to see if it creates a higher low. Ultimately, if we can break that, then we could travel down to that yellow daily point of interest. That would be about 37 pips down there. And then if it gets down to that 200, that would be about 40 plus trade. Okay. So ultimately, when it starts breaking there, I've already measured it. I know down there would be about 25 pips. That's when I can start to reduce my risk in the trade ultimately, or wait for this bar to officially close, right? Because it could just come down there and go right back up, right? Okay, so everyone, please manage your risk accordingly. To target that red line, that previous low would be about 25, 27 pips. If you want to reduce risk, more than welcome to. If it breaks, okay, so we broke new lower low. See how they just kind of showed that new lower low break? So there's no tweezer bottom lows. There's a new lower low in the market. In order to keep pushing down, we got to create new lower lows and lower highs, which we have created. But also, we do not have a bar closing below here as of yet. Will this be the first one? Okay, so that's a good push, guys. That's a good push. We got our volume trading below 30 pips. Okay, down to that again. Okay, so I'm going to a break even now. I'm going to go to a break even. It just traded right down to that yellow line. I'm at a break even now, so I've taken out all risk out of the trade. Now I got to watch where it can close and ultimately take some profit out. Or worst case scenario is it comes back up and hits me at break even. That's fine. As long as I don't lose any money, I'm okay with that. Okay, so we're in the money. All we got to do now is just manage our profit, right? Okay, so you know that this is a strong daily yellow line, 3685. Let's watch. Holy shit, if we can close below this, wow. And remember to convert this zone from green to red if we get this bar closing below, because it could come roaring right back up, blue, 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 and, you know, get a wick and go down. Okay, so right there, transacted at that daily point of interest. Man, this is a tough one here. Wow, where will it close? Shit. Unfortunately, if it comes back and hits my break even and I didn't take out anything at that yellow line, I'm going to be very upset with myself. Okay, now I got to continue to watch this candle close. You guys got a W? You guys already did? Okay, no problem. You guys see I didn't do anything. All I did was reduce my risk to break even. I should have closed out 80% down there. Woulda, shoulda, coulda. Again, I'm trying to explain things too, and I forget to do my own stuff too. But it's okay. I'm not making excuses. Just got to now. I know that I have no capital at risk, so I can trade with zero emotions, right? I know that my money is safe. All I'm doing now is just managing my profit. Okay, so but let's let the body close on its own. Let's see where it will close. I would love if it can close below this red line. If it doesn't, be prepared for a blue candle to come back up off of this wick right now. So blue candle. Now, can we determine 50% of that? You know, if you want to get your cut line quickly, I'm going to say that 50% is right there, okay? We already came up, shallow pullback, pushing down. So let's see now quickly with this momentum, can we take out that previous low, take out that daily position, trade down to that 200 EMA? If it needs to come all the way back up, that's where I'm determining that 50% is. Guys, green to red, you know, continue going through the motions. Okay, I want you guys to learn how to do this. So that was the first bar that did close bearish below our green zone. So that was our European 4-hour block that now has converted into a bearish block. So let's see now. Again, if it comes all the way back up bullish, that's where I get stopped out at break even. But for you guys later selling or trading, it could come in there, back in there, and then have the big drop, right? But now that block up there above us could be populating with offers now in the market, right? Because it's flipped that zone. Okay, so we're making an attempt again to come back down, revisit this low, but it's at that daily position. Can we break and drop down to that 200 EMA? What's below us? So if we break, guys, just real quickly, looking at where there's structure in the market, right there, guys. How can we not acknowledge right there? There was body, body, a wick, body, 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 red line 3682. So if it breaks and we continue to drop down further, I would be targeting that red line for higher low support right above that hourly white line. Okay, if it does get that volume below breaking that daily, right now, shit. Tweezer bottom lows, fuck, I hate those. I hate that shit so much, you guys don't even understand. Right there, those equal bottom lows at that yellow line, okay? Unfortunately, there's heavy support at that daily level, you know, but man, it came down there, got those buyers back in. We still have good sell side volume accumulating. You guys don't understand the significance of this yellow line. If we can break this, close below it, because all we're doing now is triggering more buyers in the market. When we cannot create a new lower low, especially at a daily point of interest, the depth of market is accumulating with buyers asking to get back in, to buy this pullback and take it right back up. Okay, so I can't stress the importance of sellers to create that new lower low and keep the movement continuing, lower lows, lower highs, lower lows, lower highs. And with volume closing below, that would be the cherry on the cake. But man, big battle going on down here. Two more minutes to go. Hopefully some of you guys maybe, you know, grab some pips. I don't know if I'm getting too greedy down here at this yellow line, and the market could come right back up and punish me right up there and teach me another lesson. Say, Ron, when you came down to this yellow line, why did you not take out any money out of the market? I'm going to tell them I was getting greedy. I wanted more and I wanted more and I wanted more. And that's what happens in the markets. Okay, now we're retesting 50% of that previous bearish candle. Okay, so now we're retesting the point of control of that previous bearish candle. That was the one that closed below. We're retesting it. So it's still holding with sellers there, rejecting those buyers. We're coming back down. So you see the retest, that was a proper retest right at that 50% where I cut it in half. Okay, so now we're getting the close into 40 seconds. Can we push down? I know we can't break that low right now, but can we get bearish volume just below that red line? Because then the next candle, off of that momentum and closing below there, it could be resistance and open ignited and continue push to take out those lows right there. So this is a big battle right here, guys. I'll get to US 30, guys. I know it's 10 after 9. We got to get to US 30. Let's just watch where this candle closes. Hopefully we can escape this with some profit and look at US 30 and NASDAQ get ready for Wall Street very, very soon. Here's the close. It's a spin top bearish candle. Okay, remember it opened bearish, came down there, got that equal bottom low, came all the way up, retested 50%, got rejected. We virtually closed right where we opened, but there was a little bit of bearish volume. So very insignificant volume, but still bearish. We just opened with that one with a blue candle coming up, lower high rejection. So can it fill these wicks and just take that out? I hope it does, because I kind of want to escape a little bit out of this trade so I can get ready for US 30. Get my 40 pips and out. Okay, so there it is. Okay, so I'm going to take out 80% down there. Okay, I'm not going to play games now. Gave me my attempt. I'm taking out 80% and I'm leaving the rest break even 20% again. Okay, so it came to my target, yellow line. Regardless what happens down there, I closed out 80% down there and I have now 20% running. So I'm just going to put my hard 20% stop in there just so we can go on to US 30, guys. Okay, so if you guys got some pips out of that, put a W in the chat. And if you understood why I was sell side instead of buy side, hopefully I explained it all to you guys. And if you learned something, hit a like in the chat, hit the likes, subscribe to the channel, guys. We do this on a daily basis. Okay, we're here every single day grinding it out with you guys. You learn with us. There's no BSing. This is a live environment. I go through my thought process. I tell you guys when I'm in drawdown, where my stops are, where I'm taking out profit, break things down with you guys, okay? I'm trading with you guys, right? So I just don't show my P&L. Everyone asks me, Ron, why don't you show your P&L? I want to be a trader that doesn't show P&L. I want you guys to be here for learning purposes, not how much money I'm making. If you want to know money, go to those other traders. They have all day they're showing their money. You can go learn with them. We're here showing the real side of trading. We're not showcasing Lamborghinis. We're not showcasing vacations. We're not showing ladies with bikinis behind me. We're showcasing candlesticks and how they're moving, okay? How much I make or how much I lose is irrelevant. That's for my wife to, she's my financial advisor. She told me don't disclose this type of financial information for the world to know. It's nobody's business. So I listen to my wife. She taught me that, okay? So she controls my money. I'm a simp like that. She controls my money. You guys can deal with my wife if you want to know how much money is involved in this. Guys, I'll just tell you a tip as a trader. Nobody needs to know your business. How much money you're making, how much money you're losing, no one's business. No one. It will just bring unwanted attention. I tell people ask me, Ron, how much money you made? Nothing. I'm broke. I'm living paycheck to paycheck. That's the way how I want to live my life. No one bothers me anymore. I like it that way. Live a humble life. It's a good life. Okay. We're here for education, not for materialistic things. We want to be respected for our education here. So hopefully I broke that down, guys. I got a hard stop right there at break even for my 20% remaining. Yes, the market could come up and tag me out, but see how it gave me a third attempt at that yellow line to do something, and I did something, okay? So I didn't want to make that mistake. Yes, it could go down. That's a possibility, but it could also come turning right back up. So I didn't want to make that mistake of not taking out any money at that yellow line. That's why it's a specific yellow line, guys. So hopefully I broke that down. We've got about 15 minutes now. I got to get to US 30, guys. We already did NASDAQ. So NASDAQ is still very, very choppy. Things will open up as we get into Wall Street. Let's do NASDAQ real quick. I can see NASDAQ, nice, beautiful sell, okay? So guys, like how could you have sold that? Ephraim, you know, you were telling me about it right there. Guys, if you just located 5-minute line right there, see an impulse came back up. Impulse came back up. I know this is not the type of analysis we should be doing, but if you had a trend line coming down, you see it's descending. There's your descending triangle. There was the first body, that candle that closed below. It came back in. Bearish ignited candle pushed down, new lower low and closed. There was a retest right there. You could have, I didn't, okay? I know woulda, shoulda, coulda. You could have attempted a sell right there, or you could have waited on the next bar where it opened, ignited, and been in a sell. Place your stop loss above those highs, and coming down, you're good. Once you get a move from where 855 down to 8, you could be up 50 pips. Start coming down, reducing your risk to a break even, and do some. Take some money out. So you see how that's a descending flat bottom. There's your descending, continue trend moving down, okay? So that was just breaking that down just right there. I know we didn't take that trade, but I'm just showcasing you what to look for, okay? Let's go on the daily. We got to do this quickly now, okay? So I'm going to start talking fast. I'm not speeding up the YouTube. It's not going to 1.5 or 2 times X speed. I'm just speaking fast here. So that was previous double top, all-time high supply. There's another top. Did we close above? Yes, we did. That was the Powell Day 2 Jackson Hole Symposium, Friday, August 22. Volume close above, confirmed us. Go red box, green box. Just like we do on the 5 minutes. Why are you not doing the same shit on the daily? When you do it, stretch it into the future. Are we back in here? No, we're not. So it could be a buying zone. We already did retrace 50%. Yellow line, point of interest. Throw an alert in there. Add an alert. Create. Yes. There we go. And now, do I need to dissect down here? I don't, because I don't think we're gonna sell all the way down in here. We still got some above us. But do we have a trend right there, right there, right there? Are we still moving up? What is going on with US 30? Look at this thing, okay? That's a daily trend. I just plotted it from right there. Got those. We're still trending up. So we have not broke any of this ascending trend. We broke out there, we pulled back, retested, held, continue to go. Here's another particular zone right here. Body. There's Let's place a yellow line at these bodies right there. If I can grab my yellow line right there. So yellow line, see that now? Now, you guys understand real quick why I placed the yellow line there. There was the close of Powell's candle, open of that candle. Then I see an impulse, 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 body, close, body, open, impulse. So guess what I'm doing with all those impulse wicks? I'm going to draw a box to the yellow line and grab all those wicks. See what I did there? I grabbed that wick, got that wick, that wick, that wick, that wick, that wick. Make them red at that point to show that that was resistance, supply, sellers, whatever you want to call it. Stretch it into the future. See this big bullish candle close above that same zone. I'm not changing the size of it. I'm changing the color to illustrate to you. We closed above it and now we're retesting it, yesterday's low, and we're holding it so far. So that zone is still holding buyers, right? Are we going to trade into this thing today? Get in here and go back up? Or are they going to break this, close below? There's that trend line. And tomorrow, FOMC, we are dumping. That is my bias. I'm telling you guys in forward analysis. I'm telling you guys for tomorrow what's going to happen. I'm telling you my bias tomorrow, FOMC is going to be buy the rumor, sell the news event. And this is the way how they're shaping it up, in my opinion, okay? We'll revisit it tomorrow. We're going to do a 6 a.m., 10 a.m. session tomorrow. Dave posts. I'll come back noon, and we'll keep analyzing the markets, okay? So stay with us. Now, what do we have here, okay? Did we hit an all-time high? Yes, we did. Where? What time is it? 9:18. Okay, so I got to move. There's the all-time high right up there, 46,135, okay? There's a nice big bearish candle we can base some analysis off of. Last Friday, I can already see 50% has already been retested yesterday's high because I did a little bit of daily analysis yesterday. I hope you guys did too. Let's measure it. Opening balance on Friday, closing balance. This should have been part of your weekend review. You shouldn't be doing this right now. That candle closed on Friday. Saturday and Sunday, instead of being at the bars and drinking and partying, you guys should be on the charts. Forget about the bars. The bars don't pay you any money. You lose money going at the bars, okay? Bottle service costs a lot of money. It's just, forget it, guys. You're getting more mature. Forget about the bars. No more bars. Now on weekends, we get in and we analyze. We learn something that will make us money, not something that's going to lose money. Going to the bars is a depreciating asset. You're not making money by going to the bars. You're losing money every time. I know it's nice to pop some bottles with your friends, get the firecrackers going, but you're going to add up all that money. Every weekend's going to cost you $1,000 and you got nothing to show for it. Your friends don't even call you the next day. So learn from Unc. Forget about the bars. Come in and do your analysis. Look at yesterday. Let's now examine yesterday's volume. We came in bullish, right at 50%. What was the reaction? Sell. Came all the way back down, close right there. Now, what do we have? Closing opening price. Let's follow our daily candles right there. Yellow point of interest. Today was bullish. Look, already bullish. We've tagged into the red zone, lower high. They're pushing it down. The sellers came all the way back down to the opening price, broke it. So we've got a high already established in that red zone, okay? We've got already a low established. Today turned into a bear shooting star on the daily, and now it's a pin bar. It's coming right back up, maybe during that news that we just had. So you can see if we continue bearish breaking down our low of the day, we could definitely fill yesterday's wick. Let's mark yesterday's wick with a ruler so you can measure it. Yellow tape. Remember, just read the tape, get your ruler. This is where we're going to learn in Wednesday's webinar is how to use our favorite tools in our toolbox. See how I have all my tools in my toolbox? I'm not going looking for these things. Guys, if we just break dirty 30 from the purple line and just come down to there, that's about 60 pips. 55, 60 pips. And then if we trade down in here, we got to know that we're trading in this zone. So I got to just kind of adjust it, get it equal with that yellow line. Okay. And look at what I'm going to do here, guys. I'm going to find exactly where 50% of that green box is. Grab my Fibonacci. I don't want to guess here. Right up there. There's 50%. Yellow line right in there. Because if we're coming in here today, I want to know exactly where's 50% of this green zone. Okay. Perfect. Now we got that analysis done. So now all we got to do is look for volume to close on the 4-hour, hourly, 5, 15-minute below this purple line, maybe to continue to push down. However, they could flip the candle and turn it back up on us, right? You know, just fake out the market and build it back up to drop it for FOMC. That could be a possibility. But that's enough analysis on this daily right now. Let me just go to the 4-hour real quick. What time is it? 9:21. So we had the big push up. There's our zone, all-time high. 4-hour candles started coming down. We can see how they were trading real choppy. Here's our neckline. If you want to consolidate all of this garbage right in there, there it is. Trap all that garbage, right? These are 4-hour candles. They've been accumulating. So next move is going to be, they're going to come up, close this, go for the all-time high again, or we're going to go bear side, sell side. Just like the 5-minute candle. Look at wicks, 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 wicks. I don't have a 4-hour body closing below there. Just like our sell that we just had on gold. Same shit. But this is the 4 hours now. We need a 4-hour body or an hourly body to close below here. If it comes up, it'll retest this. Then we're breaking down. You can see the selling. We're cutting through that zone. But I would place emphasis right at 45,700, right at the midpoint. If it starts to break down, we're right there. You should have an hourly white line base right there. There's the pivot point on the 4-hour candles right there. See how it came, 50% of this candle already retested, went back up, came down, body. So if it breaks all the way down there, you can have this as a yellow line or a white line, whatever you like. I'll keep it yellow because that is representing a daily point of interest from Wednesday, September 10. Okay, so that's what we got going on. Look at it. It came up. We're in the consolidated flag. It could either break up, or I have a 4-hour candles coming down. I'm going to close in 37 minutes. Might bring this sell side volume coming down. Let's go to the 1 hour real quick. Look at the 1 hours. There's that big pump we had coming back. We traded all this shit yesterday, coming back in. Now it's pushing down. 2 a.m. There's pre-London, London. Now we're starting to come down, push down, push down. Let's see. We're trading right at the lowest point of the day right now going into Wall Street. If you get an hourly candle close below here, you could be pushing down, okay? So 5 minutes, guys. Right here. These are our 5-minute candles going into Wall Street. Let me just get rid of these arrows from the 4-hour. And do we have some 5-minute structure in the market? Right now, if you want to draw a little 5-minute trend, you're more than welcome to do that. Starting from highest point of the day, connect few points of interest, A to B. I could go to all the way down here like that, but I'm going to continue with the original A to B, extend it into the future, showing that the market is pushing down still. Do I have points of interest on the 5 minutes? Yes, we do. See, when it came down, it stopped right there. I see all the wicks, and bodies. There's my point of interest on the 5-minute line right there. So I know that 45,865 is still holding. There's my daily. We came all the way down to the lowest point of the day, and now it could come back up and maybe push back down. So this is, what time is it? Shit, 9:24. Okay, it came down, stopped, coming back up. Maybe we'll get another leg coming down. Will it be a double bottom and they hold it? There's our W. We could break out up to there, catch a few pips onto the upside, but it could come up there and then they slam it right back down. Okay, so you do got to be ready for all of this that could happen. And where do we have like a 5-minute block in the market? I would place a 5-minute right here, right there. Those, if I was to trap those 3 candles, I would have done it right there, and I would have extended in the future. You can see it's red, extended into the future, make that zone red. Now we know where our block on the lower time frames is. It's right there. So if we start to move up bullish, you're attempting that trend line, but that block is there. That's where those sellers will be to push you right back down. If you're buying, you got to break that trend, get above there, close above, turn that green in order to get back up to the highest point of the day. So that's what we got going on right now. Let's add our daily bar indicator right here. So remember, opening price was right here. We were initially bullish all the way up to the highest point of the day at just pre-London, 2 a.m. They pushed it all the way down. We just hit the lowest point of the day right now at 10 after 9, 9:15. Now it's slowly coming right back up to that daily point of interest, okay? EMA 9, there's our green line. We're right above it. EMA 200 is right here, okay? So I'm bringing these two side by side. Let me just get rid of this consolidated area, okay? So these two are side by side. We got US30 on the left side, and we got NASDAQ on the right side. Gold, just taking a look at gold, I got stopped out on my break even right there, that 20%. So this trade is now closed. Guys, just go through the motions, invert this 5-minute fair value back to green, okay? So just go through the motions. Let me just get rid of this. I'm no longer in this trade. you can see the daily position, yellow line held up, and it's coming right back up. If this 5-minute volume closes above here, that big, remember that European 4-hour point of control, don't change the size of the zone, change the color. You could be now developing another depth of market with buyers. You could be buying pullbacks and taking it back up, okay? So when things come down, you could be going back up. When volume is cooperating and moving nicely, you trade with the volume, okay? Just capitalize on the zones. Make them red to green, green to red, right? Okay, so we are now 3 minutes away from Wall Street market open. Again, please, everyone, please manage your risk. Take a look. I'm switching to now index trading from gold. I need to change my sizing. I need to change up everything, okay? And I need to determine how much I'm gonna risk going into Wall Street. I've already taken 2 for 2 trades today, already taken some money out of the market. Do I want to, again, risk it all and go all in, like double down? This is not a blackjack table. We're not playing blackjack. We're traders now. How much do I want to, I can walk away from the markets right now and go enjoy my day. Do I want to ruin my day by going excessive leverage and risking it all? No. So I'm going to use a smaller portion so I can, if I get stopped out during Wall Street, I still have maintained some money for the day to continue to go start this week. Yesterday we had a good day. Tuesday is a good day. And then tomorrow we're going to trade with a plan every single day. We can see now, see how cleaner, in my opinion, I'm not saying this because US30 is my favorite security. I'm being honest with you guys. See how clean it is? It's coming down, trading right there, back up. NASDAQ is really messy right now, okay? You can see it's kind of, just look at these two securities. Which one looks cleaner to you, in your opinion? Just be honest, not favoritism here. You got to be able to recognize clean volume from choppy volume. In my opinion, NASDAQ is choppy right now. It's just going up bullish, bearish, barcoding. We have more cleaner moves on US30 right now, okay? So that's just how to understand what is clean volume to trade and what is volume you should be avoiding right now. In my opinion, if I had to pick from these two securities and I had no idea what they were, if you just showed me these with no security ticker, and you say, Ron, would you trade this one or this one? I would definitely pick this one, okay? So I hope you guys understand why, okay? You got to be able to read clean volume. Look at this move, okay? So very bullish right now. They're moving opposite direction. NASDAQ has got a big bearish candle while US30 has a big bullish candle. Could this have anything to do with retail sales that just came out? Possibly. Dow Jones is an industrial index. Does it not consist of Home Depots, Walmarts, Costco's, retail store outlets? Yes, put the pieces of the puzzle together. NASDAQ is mainly tech, right? So it's Nvidia, it's Tesla, and things like that. Remember there was one that excluded automobiles, Core. Put the pieces of the puzzle together, guys. These are completely different securities, indices. This is more tech related, selling off. US30 is more industrials, retail, everything we buy is basically in the 30 securities of US30, and it's moving bullish right now. US dollar is moving down right now, okay? Here's market open, trading right back up, okay? Again, have a plan. Are you going to trade right away the first 10 seconds of market open, or are you going to wait 5-minute closure? Look, it just opened bullish, ignited, and just popped out of there, okay? Yes, you could technically be in a buy in there or bought that, but look at the sharp rejection coming back down. So it's better we wait 5 minutes, see what the market presents us, and maybe we trade after the fact, okay? Unless you have your own bias, you can do whatever you want, okay? I'll wait for a bar to close. But thank you guys. Good session today, regardless what happens here. Hope you guys are learning with us. Okay, so you see it open bullish, right into about 50% of that previous candle. I can literally see 50% pushing back down. Now we're trading in that green block. Will they pick up in here and come back up? I would be looking for picking up volume and maybe closing above this red line for NASDAQ to continue that bullish breakout of that trend. Or if the sellers close it below here, we might be making this green box red, and then maybe see further selling pressure to the downside. Okay, we see US30 just breaking out of here. Okay, so it's broke its daily high. We have a new high. Remember what we defined up here, this yellow line, 965. That's 50% of this red block. It's got rejected so far. This is volatility. See how it came up and boom, they reject it back down. This is Wall Street, guys. Nothing to play games with. I'm waiting for the candle bar to close. Now look at it. It's a big shooting star candle. Wow, okay? So, you know, if you were in a buy from 915, 920, 925, and you got that bullish ignited open, and you did not do anything breaking the highest point of the day, hint, hint, nudge, nudge, wink, wink, okay, you got to do something there. You know, like that meme where it's poking you and say, do something? That's where you could reduce your risk. You could scale out, because sometimes this shit happens. It breaks the highs or lows and gets a sharp rejection. Sometimes it will never revisit this area again, and then it turns bearish, right? It happens, guys. But if it continues to build its way up there, then it's showing us the strength of the volume, right? So again, this is now half the candle is exhausted. I know exactly how it opened up, very bullish. You know, it was that bullish ignited candle, came back down. Now it's gathering some bullish volume. Where will it close? Will it close back below this red zone? Then I know then they took out today's high liquidity. Then it could be selling pressure that continues to come back in, right? Part of trading is also following the volume and analyzing. It's not just blindly hitting the buy and sell button and hoping for the best. It's being patient, disciplined, watching, making note. Did they take out the highest of the highest point of the day? Did they protect the low of the day? Put those pieces of the puzzle together and continue going with the flow of the market. Okay. Look how much indecision Nasdaq has right now. Gold. Yeah. Okay, guys. So gold, you know, red to green. That's now back to that. Remember that this block is representing European volume. So there's just that quick trade down there, the sell, but now buyers, you know, got the block back. So if it pulls back in here, you know, you could be looking to, again, buy near this white line. If it pulls back in there, buy discounted buy. It came all the way to that next red zone and pushed right back down. So you're literally trading from one zone to the next zone or lines to line. Oh my God, I'm starving, guys. Did you guys hear my stomach make some growling noises? It's so embarrassing. I don't know if you guys heard it, but my stomach just made this huge growling noise. I think it's time for some pancakes soon. Okay, so US30 is selling off. Or sorry, Nasdaq, my apologies. I'm just looking at spreads right now. Okay, so if this big bearish 5-minute candle closes below here, green zone is going to go red. And if we could determine the point of control of that big bearish candle, we could wait for a pullback to come in there and determine, do we want to continue to sell with that volume? Will the buyers bring it right back up? We got closing price in 10 seconds. We can do the same for US30, but I'm utilizing this red zone from over here. So if it closes above, which I assume it's going to do, I'm going green. Okay, so it's a bearish ignited candle. How far down can it go? Can we just cut that blue candle in half right there? Can we get our Fibonacci tool to determine exactly where's the halfway point? See how I'm doing this, how it's coming down? Look right there is the 50%. If I'm looking for that bullish point of control of that volume, it's right there. Will it hold? Good wick, good respect. Can it continue to hold? Will it? Okay, so now it's breaking, coming down. It's going to test a little deeper down into here. Will it be bearish ignited engulfing, coming all the way down here? And maybe this will be a fake out and close below here, and then it will start trigger that leg selling back down. Okay, can you guys go through the motions for me with Nasdaq? It closed below, green to red, right? There's a lot going on, guys, over here. So look at how it retested. If it loses its opening, could continue to fill the wick and drop. Okay, there it is. like it's a shooting star. It's already retested in there. I like to trade more so US30. Remember I told you I hated NASDAQ last week, so I kind of want to avoid it right now. I want to watch US30. Yes, Tone, we mark here SST 50% of the body instead of the wicks. You are correct, okay? Don't ask me why. I've explained it a million times on these calls. Just go from open, closing, volume, okay? Make life easy. Okay, so you see the retest, red zone, shooting star candle coming down. So if you're in a sell on NASDAQ, you're looking to, again, break that yellow line. We saw this with gold earlier. We could not break it, and then it reversed right back up. But this is now Wall Street. This is heavy volume now trading in the markets. So we see that bearish ignited US30 candle broke through the zone, came up, big wick coming back up now. We still have that ignited head open pushing down. 3 more minutes to go. So some traders buy the upside of the wick coming back up. Other traders will wait for the full bar to officially close. Okay, I'm going to wait it out. Because, you know, what if you're going to buy and then it continues to push down and close below there? Then unfortunately, we're going to have to flip those zones red, and then it's got a bigger leg coming down. We could either buy a deeper pullback, or we could maybe sell with the next momentum. And this could be a fake out move that they took out the highest point of the day, and then it's coming down bearish engulfing right back down in here, okay? So this could be a fake out as well. I know some of you guys want to quickly take a scalp real quick right now, but you got to be focusing on the 1 minutes. I wouldn't be watching 5 minutes if you're just looking to scalp. I would be focused on the 1 minutes. We'll do a 1 minute session where we're strictly looking at 1 minutes. Gold is green, yeah. It inverted the zone, guys, okay? So it flipped the block, exactly what I'm talking about. Okay, so it flipped the zone, color, retested, and driving. So you could be, you know, coming up now to that highest point of the day, all-time high, and continuing to drive through there. So if it closes above here, just flipping your zones. See now how the volume is right back again above that trend line? That's where we had that sell coming down, picked it all the way back up, and now the news passed and gold is just doing its thing again. That's why when you learn how, it all starts with a top-down analysis. I'm telling you the honest truth. It starts with a top-down analysis. Once you figure out your higher time frame zones, points of control, you trade off of them. Just let the volume officially close above or below and determine your retest, your pullback trades. You can trade off of those zones all week. They're static zones. The only thing that moves in the markets is the volume. The only thing that's variable is the volume. The static zones are static zones. I take them off and put new ones on every single day to help teach traders how to do it. But myself, if I wasn't trading with you guys, I would do this on Saturday or Sunday and keep Monday to Friday my same charts, same analysis, same lines, and just place my alerts at the different zones, points of control, and watch volume, okay? So you see, NASDAQ is continuing breaking lower low. If it closed below there, could have one more leg pushing back down. If it comes back up, you got a zone now. Same with this. So I'm just going to get rid of that 5 minute point of control. It's irrelevant. We'll focus on our bigger ones. I assume it's closing back below that green to red now. Okay, we're back in this consolidated period. Cleaning up my chart now. Getting ready. There's the close. So now I want to base off. That's a bearish engulfing candle. Where's 50%? You know, just of that candle. My fib tool opening price, closing price. Get ready because it could get a shallow retest, and look how small the wicks are. So you see my zone, it's already there. I'm just going to kind of maybe pull it down. Shit, I hate when I'm doing this split screen. That's why I like trading one chart, guys. One chart only. Right there. 618. Bring it down right there. Okay. Man, did I miss an opportunity to sell that quick candle? Let's see. So see the daily candle? It's already flipped. Okay, so it's pushing down. See if it turns back up. You know, we could be looking for a retest sell inside here. I'm going to place an alert in there if it comes back to me at some point today. Could be looking to sell the pullback. If it comes back up bullish, 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 gets in there, and then they push it back down, I could continue to sell at that block. However, I might be missing out on a sell right now because There was a pullback, short wick. There's the pop, filling down to that purple line. If you're a scalper, these are those yellow to purple zones you should be measuring. That's approximately 35 pips. It could fill. Yes, it could break through there. If it does, what's below the purple line? Go back right there. I can see bodies and wicks. I would go with that wick. There's a wick, a wick, a wick. Draw a red line right there. Damn, I missed that selling candle, okay? And this is the candles I look for during Wall Street, okay? I like to take those with those short wicks, a retest, shallow pullback, that break, drop down, grab 20, 30 pips, and just pip and dip. I didn't do it in this situation. Now I gotta wait. I don't want to FOMO trade it because now it's at that purple line, right? It could be developing a double bottom down there. It came down one bottom, okay? Our overall neckline is all the way up there. I would be more concerned with the neckline in this red zone, but it's coming down. See, second bottom, they're breaking it. What happens if it comes back up, grabs liquidity? It could have another leg coming back up like this building. However, if they officially close it below this purple line, could continue to further drop down. But let's watch this, okay? So it did pierce through, did break, coming back up with a wick, closing in 2.5 minutes. Congratulations, Sherry. You took the Dow sell. You're up 1% on the count. You're like every single day with 1%. Wow. It's unbelievable consistency every single day, And that 1%, Sherry, it adds up, as your capital accumulates, that 1% every single day, it's awesome. Like that could be about 5% per week, 20% month over month. If I put my money in a mutual fund in the stock markets, it pays roughly 8 to 10% per year annualized in the entire year. And if you're pulling in 1% consistently per day, that's 20% month over month. That could be about 240% on your account year over year. If you can stay with that 1%, you can see how you're outperforming any bank ETF, any bank mutual fund. Some ETFs, are up there 15%, but they're around now, last couple of years with the markets, how they're going. But traditionally, they're about 8 to 12%. But that's really good. You're outperforming the markets. And it just takes that 0.5%, 1%, but you got to stay consistent with it on a daily basis. Okay, we got 60 more seconds to go and close. Also, we have a new 15-minute candle. So if you haven't traded or taken any trades, go back to your 15-minute candles. We had that big bullish candle, 9:15 to 9:30. There was that market open, big bullish ignited bar. Remember on the 5 minutes we watched it? Took out the high of the day. Now we got 15-minute volume trading back down. Look at our daily candle. It's flipped bearish. So we could see selling pressure today going forward. So if it kind of closes here, we could be in our mind, our bias is selling pullbacks, right? You got to wait for it to pull back, either back up to this purple line, back up to this yellow line, or 50% of this candle, pull back, and then drop, continuing back down. Wow, Jason, since using our analysis, you've only had green days. That's unbelievable. Unbelievable. Do you mind me asking how long you've been trading the markets, Jason? Yeah, I can already see the purple line a little bit above, a little bit below. This is called freestyle trading. Okay, a little bit above, a little bit below. I can tell that that's my point of control of that candle. Man, so they're continuing to dump the market. Again, guys, I'm sorry, but I don't like to just sell lows because anytime you sell the low, it could turn right back up. My objective here is to sell the pullback. So you got to patiently wait for it to come back up because sometimes when you get caught, FOMO, fear of missing out, you get caught, you sell that low, then it's returning back up. You're in drawdown, you're panicking, and we're waiting patiently to sell a pullback. So sometimes you're going to have to realize it's not the greatest to be buying the highest points and it's not the greatest to be selling the lowest points. Sometimes it works. Majority of time it doesn't, okay? So in these situations, don't play the woulda, shoulda, coulda game. Just stay disciplined. Look at coming back up, Okay, is it going to transact right into that that red block in there? Remember the purple line was the previous lowest point of the day. Now it could be resistance. Okay, so it's coming in there. Let's see if it gets rejected. This candle just opened, so now it's coming in. Okay, will it get rejected out of there? Okay, it's coming right in. Now it hit that purple line. Okay, you see the wick tapped in. Will it lose its volume? No, it's coming back up, recharging back up. So it can continue to trade a little higher. Okay, coming back up. Will it make one more attempt to break, right? Next will be the red block, or will it get rejected again at that purple line? Okay, I'm going to go in to sell. It got rejected like 3 times. I'm selling a bullish candle that's coming up because it's retesting that red block. So I'm going into sell to see if the sellers can continue to offer and lower that bullish volume. As they do that, I will be going into profit. If they can absorb all of those buyers, bring it back down to the lowest point, and then maybe break it down to the next yellow line. So I'm going to sell. I'm testing out this block. It's going to be probably my final trade of today's session, but I want to show you guys how it retested. I waited patiently. Instead of selling the lowest point, I waited for it to come back up, come back up, come back up. I noticed it got rejected at that purple line 3 times, and then the 3rd time I entered in my sell. I'm placing my stop loss now. If I want to give it more room to breathe, right, I could just be like right above the yellow line, above that wick, but more room to breathe, you could give it above that block, above there, and then I would be looking to clear this entire green zone if I'm giving it more room to breathe, looking for a bigger reward, right? So now that I'm in the trade, I got to now continue to follow the volume. Got to continue to follow it, right? So we got to follow where this thing can close. Can we come back down to the opening price, push down? Can we eliminate all of this blue volume in order to continue to push down? Again, I could get my ruler out to measure defined ranges where it could come down to. So that yellow line, if we could just come back and we trade back down to the lowest point of this candle, that could be about approximately 50 pips down there, okay? So I got to continue to watch that. If it comes down there and starts breaking that, and we push down like a bearish shooting star candle coming down, that's when I would be eliminating and reducing my risk up here, okay? But for now, got to give it some room to breathe in case it does come back up here and wants to test this daily point of interest up here, okay? So this will be my last trade of this today. This is my 3rd trade. We're going to stop at like 3 trades. Plus my stomach here is rumbling and grumbling. I need something to eat. About 60 seconds to go into this close. Okay, so again, if it closes above there, I got to go through my rules. Okay, even if the trade is going against me, I still trade on rules. If it closes above this red zone, I momentarily got to make it green because then it could show one more leg coming back up. This is where if you're in a trade, if the trade is going against you, this is where you can maybe start to close it if it's not going in according to your direction, things like that. So shit like this happens, right? I've got to wait for the final bar to close. 30 more seconds. So if it can continue to drive through here, I'm watching this yellow line. I'd like to see sellers there come in. Okay, remember this is just representing 50% of that previous candle. This is more of a daily position up here. This is more of where bigger sellers could be located near this yellow line. And it's at that nice psychological number of 45,850 up there. So can we continue to offer to these buyers up there? Okay, so it did close above that red zone. So red goes to green. I see we got a bearish ignited candle coming down. That's nice, but remember we're trading into a green zone. Okay, so we got that ignited open pushing down, green zone getting a wick coming back up. Can we continue to bid down below that green zone, come down like a 3-bar play, maybe eventually close below that green zone again, then I can flip it red and continue to go through with the motions of the market. But if it could come down here, it might pick up a higher low and come back up. So we really got to come back down and maybe take out those bodies to continue to come down to fill that wick. We're coming down now. Again, we're back in profit, but we're looking to fill down there. And remember, with this volume of Wall Street, this is big volume, guys. It's not Mickey Mouse volume. That's 25 pips right there. If we can continue to break down, could be about 45, 50 breaking down there. Okay, so we got that nice push. Here we go, guys. Get ready. Remember, the yellow line is a target. That's where you could reduce all risk. Okay. And it just took, there it is, okay, coming down. Can we break? We're down to that yellow line. That's approximately 50 pips, guys, okay, somewhere around 45 to 50. You could reduce risk. You don't got to go to a break even, but you could reduce. You could bring it down just above that yellow line, right? But if we're waiting to see what will happen, if we can close below, create a new lower low and close below, we could therefore push even further down. NASDAQ is pushing down. Fantastic. NASDAQ is working down to the lowest point of the day. Okay, let's see if US30 can just break that a little further down. We reduce all risk, eat a little bit, take out some profit, and we're 3 for 3 for today. There we go. Okay, so I don't want to see those equal bottom lows. Do not show me those equal bottom lows. Oh, break this. Someone just take a bid. Take a bid on US30 right now. Someone drop a Lambo. There we go. Okay, I just added. No, I'm joking. But that's, we just broke. Okay, I'm going to a break even now. Break even time. We're up 50 pips. 60. There we go. Okay, I'm going to take out 80% because I want to end this call with 3 for 3. Perfect 100% batting average. That's a great baseball game. Okay, so I'm out 80% down here. I'm happy camper, and I got 20% remaining with a runner. Okay, but you see how that worked out, guys. Okay, that big bullish candle came up, closed above, but we got that ignited bar continuing pushing. So guys, just sell pullbacks, right? Like, yeah, I went in on that wick because you remember that candle was coming in, it got rejected there, and okay, one candle behind, but that one was bullish, but we still got the result we were looking for. So sometimes scalping, it's candle by candle, but guys, regardless, 70 pips coming down there. If we can target the next yellow line, 95, maybe a 100 pip move. NASDAQ just kissed the lowest point of the day. Could see buyers bring it right back up, but you got your zones above you. Okay, guys? So we're 3 for 3 today. Put some W's in the chat on YouTube. Put some W's in Zoom if you guys got some good pips today. We're doing well this week. Let's not jinx anything. We had a good Monday, good Tuesday. Dave is coming in post. Tomorrow's a busy day, guys. 6 a.m. Eastern, 10 a.m. Same stuff we're going to go over. Then post New York, Dave will come in for a little bit. We're going to come in and do a live FOMC if there's enough likes on YouTube. Subscribe to the channel. We'll come in, we'll do an afternoon, and then later at 7 p.m. we got our webinar on our toolbox right here, this toolbox. We're going to learn all about our favorite tools. We're going to learn about our favorite indicators. We'll go about 2 hours from 7 to 9 p.m. For everyone, it is recorded. It will be uploaded to the website if you can't make it. But hope everyone had a good day today. Hopefully we learned, we earned. Guys, thank you guys so much. Hit the subscribe buttons on perfect, guys. We got about 420. If we can get this up to 500, that will be exceptional. That's a nice psychological level. 85,500. Thank you, guys. Gold, you guys, it's making your zones again, testing that daily high. Congratulations, guys. Trevor, 4 winning trades. Unbelievable, Trevor. Good job, Sherry. DCY, you got a W with 0.5 gain. Perfect. That's what I love to hear. Val, great trading today. Good for you, Val. Thank you so much. Efren, don't worry. Tomorrow's another day. You hesitated today because of the news. No worries. Tomorrow we'll see what happens. Good job, guys. Again, look at where volume closed now, okay? If you're going to continue trading, look at how that bearish candle, it went down, created that lower low down there. It dropped for, 75 pips, but look at where it closed, below the yellow line. Now it came back up. It's retesting the yellow line as resistance, daily point of interest. So if we continue just to push bid down, we could break that low and travel down to the next yellow line. However, it could turn all the way back up, but then this zone right there, make it red and just stretch it into the future. So if it comes back up, that purple line is a very important purple line. That was our previous lowest point of the day. It could be resistance, if it turns back up and continues to go back down. However, we've already retested this yellow line. We just need to push a bit down. That's the size of the wick matters. That's why I always say, guys, look at the size of the wick. If it's a short wick, it could easily fill it and drop for a new low. So we got to continue filling. Are we going to be tired by the time we get down there, or are we going to continue to break it and travel down to that yellow line? That would be approximately, if it comes down there, about 100 pip 90 to 100 pips down there, okay? That's where definitely you should be, if you haven't scaled out, you should be scaling out a little bit down there, because now you're going deeper and deeper down into this depth of market where this green box is. And that's roughly 50% exactly of that zone. So that's where you should be at least doing something down there if it gets down there. However, it is a green zone, so it could be building its way back up and coming right back up. It could be barcoding where it's bearish, bearish, coming back up bullish. It could go down bearish, but that's why you got to identify 50% of the previous candles, points of control, things like that. US30 looks like it's attempting. It wants to break that lowest point of the day and continue dropping, guys. But I had a blast. Thank you, guys. I'm going to go get something to eat. Pancakes are waiting. Good job, guys. I hope you guys are really learning with us. I hope you guys are enjoying our channel. For all the new subscribers out there, join SST if you haven't already. We'd love to have you guys join the team. This is our free Telegram channel. It's pinned at the top of the channel for you guys. There's Powell pushing me away. Look at this thumbnail. Powell wearing his sexy dress over here. That's Margot Robbie. What's her name? Margot Robbie but Powell's looking real nice, okay? So he's not giving me the candy over there. But join us on these live sessions. We're silly over here. But guys, everything is here for you guys, education-wise. The blog, retail sales, we talked about that. So good. We even talked a little bit about it. Back to school shopping maybe helped those numbers, right? Just putting the pieces of the puzzle together, guys. We'll be talking about these retail sales come holiday season. A lot of Christmas shopping, holidays, things like that, okay? So trading is seasonal too. It's got its everything during holidays, all of those things, okay? So free Telegram channel pinned at the top, giveaways, promos. If you want to join the team, guys, we'd love to have you guys on the team. Visit us, stocksnipertrading.com. Lots of education. If you guys want education with myself and Dave, there's a lot of courses, long-form boot camps, long-form webinars, lots. There's over hundreds of webinars here for beginner, advanced, intermediate. Sunday nights after next week's football weekend, I'm going to be back from Chicago, and then we're going to do the next Sunday, I believe it's end of September 29. We're back to our Sunday lifetime sessions. We'll do some more super systems of trading. I'll do pre-recorded ones, but we'll do our live webinars together as a team, starting with tomorrow night. And guys, our free blogs are available right over here. If you click on the blogs section, they're over here. But if you join the team, you get all of the trade signals, trade ideas. You get to be part of the Discord. You get all of the education and be part of all of the other live sessions we do. Here's a few things, guys. On US30, we could be on NASDAQ looking for maybe a possible buy above 275. And commodities, also beautiful, guys. 3690, Dave had us covered. If you guys were watching, right there, 3690, volume closed above, and we're getting that next breakout. Keep an eye on that all-time high breakout. It could be building to break out to 3700 plus. So if you guys got that, not only the live trading, but also we got the trade ideas and signals. So you guys see it's struggling right there. That's a green zone. So you see how it's just bouncing around here like ping pong gold, coming right back up, back down, coming in here. So it's consolidating, bullish, bearish, bullish, bearish. Hopefully maybe it can break out again, new all-time high, 3700. Then just use your psychological levels, 3705, 3710, 3715. Place heavy emphasis on those 3725, 3750, 3775, 3800. All depending on your time frame as a trader. If I'm a 5-minute trader, I'm looking for 50 points from 3700, 3705 to 3710, right? I'm just looking for 50-point trades. There's others that are looking for more. You trade according to your time frame, okay? There it is. US30, guys, retesting, still pushing down, hasn't broke. Now it's probably going to come down. I still have that 20% remaining, and guess what? Ron's going to close out everything because now this is going to be the syrup on my pancakes. So I'm closing out my entire US30 trade out there, right down to that yellow line, guys. Wow. Miss Jones, Oh, she is beautiful. Man, everyone please give a shout out to Miss Jones. Tell her how beautiful she is. Okay, can we all do that? Can we all just acknowledge how beautiful Miss Jones is? She is gorgeous. She's a very mature woman. She knows how to take care of us, right? She's our sugar mama, but you got to be good to her. You have to be good to her, okay? I will share her with you guys if you guys are good, okay? I don't normally share her, but we'll share her, okay? I'm not greedy, right? Okay, guys. Hopefully we had a great day. We had a fun session. Let's all go enjoy our beautiful Tuesday. It's sunny outside. Go out, go for a walk, enjoy the warm weather. Go grab a coffee. Guys, get out of these markets. If you had a great day, that's it. You've done your job. We clocked in, we clocked out. Go on with your day. But also, if you want to trade with Dave, post New York, have some fun with Big Dave. We appreciate all of you guys. One more time, if you guys can leave us a like prior to leaving, we do appreciate it. Subscribe to the channel because it's growing, guys. You don't want to miss out. So be part of this with us on our way to 100K. So thank you guys so much. We appreciate you guys. Have a blessed day. We'll see you guys tomorrow morning, 6 a.m. Eastern. Again, come in early because we might have a little blog education talking about FOMC. So you want to be in here learning with us. So join us tomorrow morning. We appreciate you guys. Have a great day today. Wow. Okay. So it's breaking. Next location would be that next yellow line, 45,650. Okay. Congrats, guys. Just continue trading with the momentum of the markets. Just a recap. Just look at 930. 930 opened very bullish. They swept the highest purple line, bearish ignited candle, continue push down, bearish ignited candle closing below. That's where I made my block. I decided to sell on that candle right there, and it continued to move down. So when you're reviewing this, they swept the high and moved it to the other way. So, very technical today. I love it when it trades like this. Beautiful, guys. If you're continuing to bank on that, you could have a trailing stop loss slowly coming down with it as well. Okay. Have a great day. I appreciate all of you guys. I hope I made your day positive. I hope I put a smile on your face, and I hope you guys learned something. Okay. And we'll see you guys tomorrow. Have a great day, everyone. We'll see you guys tomorrow morning. Thank you, guys. Appreciate all of you guys. Have a good day.
Hey guys, good morning. Welcome to the live session of Stocks Number Trading. My name is Dave, guys. My partner is Ron. Let's get down to business here, guys.
In on US30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.